Now, it's indeed a delight for us to gather together in a roundtable format. This in the study group, this has been called BFSI CM Think Tank, started in 2012 at Kafaret. The first event was in Lodha Auditorium, and the chairman during that year was R. Mangesh Kinare. And we had 137 people who registered, and most of them industry members, very few industry members, when we connected, we can get together and do the program in the industry format. Not 1 hour presentation, 3 hours presentation, whether it is 10 minutes or 50 minutes, but objective of the roundtable group, which we discussed and formed, was 4 hours. The current Vice President Mangesh Khanna will be very happy to see that we are sharing this again. 4 hours. One was research. All things should be presented on based on research, and whether there are 5 people also discuss research and then develop resources. Second is ours. Second hour, develop resources means develop people who can share knowledge and based on research to all chartered accountants in India and abroad through chapters. So this was the second thing, right? And do representations, because when experts get together, we discuss, and any representation to be done, like to regulators, whether it is RBI, SEBI, including ICI for accounting standards, guidance notes, SAPs, and this thing, now NFRA also. Those representation can be done through the appropriate forum, through the Central Council. And the fourth, most important one, this was mentioned in 2012, was reach out. Reach out means to reach out to all stakeholders. That means your equity shareholders, foreign investors, and bondholders, and government authorities, and every stakeholder involved. Every stakeholder involved. And so this thing is there. Hi, welcome.
Yeah, उनको एक सीट अच्छी.
Yes. Take the chair. Come here. I'm glad. I was told Jayesh is why he's here. And yes, so these 4 hours that we have been trying to do, and generally we do 8 to 10 roundtables. Yeah, 8 to 10 roundtables, and on specialized topics. Some topic may be too specialized. 5 people may just like to come, and sometimes, but capital market is very popular. Everybody likes stocks and shares. And then ultimately is to get engaged. So at least the room looks full. But if we have always tried, 5 to 7 experts are there. We share knowledge and others participate and others become future experts. And that has really worked out well since 2012. And this is the second roundtable meeting for the year, started in May. And in the first meeting also our chairman Saurabh Ajmera came. He also focused on it should be research based. I was happy. 2012 ka. He's a youngest chairman, so it is 14 years before. This was what our Mr. Mangesh Kamare was the chairman at the time. And our Mr. Jayesh Kala, senior regional council member, has been involved for a very, very long time. And the banking is close to his heart. And last year he was chairman of the banking committee. Now he's involved with members in industry, public services committee. So it is very, very good. And he has personally joined in to see that we industry members are connected. Now I'll request Rohit to say a few words, and then would request Jayesh Bhai Kala to share a few words, and then we'll start the technical session. And we have a very, very high-powered panel, and really delight to see people with experience of chairman of bank level, chairman of IBAs, of a committee, a chairman of IMC committee today is here. And it's and people from various banks, private and public foreign banks are here. Rohit.
Thank you. Good afternoon. Welcome everybody. So without much ado, as a convener, I'll promise one thing. This will be a very engaging session. I hope nobody will be allowed to sleep here. We are keeping it more immersive. When we talk about financial stability or ECL or risk framework, I have a very small story to just share very quickly. See, there was a town hall where a town planner started a plan for a bridge, a wonderful bridge, one of its kind, and it was with all risk professionals, structural architects, compliance. Everybody tried to really see it's a state of art thing. Bridge was built in specified time itself, but when the bridge was inaugurated, the first day there was a super gridlock. Mayor called, what happened exactly? So very flawlessly, the risk manager, the compliance experts, structural engineer said everything was fine. The point here was a farmer actually in the middle of the bridge with a cart stopped there, started fighting with his brother about the goat. Onlookers surrounded, people started taking selfie with the goat, and food stall and everything came, and everything is in gridlock. So just giving a on a lighter side, at times we feel the financial stability or maybe even the new norms we're looking at a forward-looking provisioning efforts and other things, we need to keep in mind the reality also. So this forum, I'm just putting up we will look into more into reality because these all things what we are discussing is available all across. Everybody knows. Yeah, ECL if it doesn't know, he will come to know. Read karke. The nitty gritties and other thing we'll get to know from experts only who have been dealing with people who have been dealing with maybe for you for an expert from KPMG or maybe EY who are guiding people like us in banks how to do, what to do. So you have more perspective, you have perspective more than one hand. So I'll stop here. I'll not take much of our time. Uh, Forum is open. I'll just start small request to Jesh Bhai. If you can just share some words, then we'll.
Thank you, Manoj Bhai, Rohit Bhai, and welcome all friends. This is one of the most active study chapter at our WIRC. Thanks to Manoj Bhai efforts taken by Manoj Bhai, Rohit Bhai, and everybody involved over here. And the topic also selected. Actually, I came because the attraction of the topic.
Wow.
But this topic is something which is very, very important because now we are going towards that conversion phase from gap to ECL provisioning. And in a way, we are going towards India's for banks also, in a limited way. But that is very important because after this India's, yesterday, day before yesterday, Indian bank results came and I believe 15,000 crore provision they have made for ECL only. So this kind of huge provisioning may come. And today we are fortunate that we have Mr. Narendra Kumar, chairman, ex-chairman of IOB, and Mr. B. Kumar, Bank of India CFO, and Mr. Banerjee. So they will be practically having a walkthrough and what the critical issues might come. Everybody is involved in some other way in bank. So this will be very interesting to listen. And frankly speaking, Manoj Bhai, I came because of the topic. Very much.
But immediately I was told you had come. I check up, so I said, where 8th floor? They said you are still in ground floor.
Yeah, I was at ground floor.
I know. Another.
So thank you very much, and I believe it will be really a very interactive session. What do you?
So great panel. But first is the participants.
Yeah.
We have Bank of Baroda here. We have Axis Bank here. We have Kotak Bank here. We have Geo here. We have people who are ex-RBI here. We have people who are ex-Bank of America here, ICICI, and multiple people from ex-ICICI, and people in the profession also, advisory also, people who are engaged with RBI on the working group committee, people who are engaged with NFRA. NFRA chairman himself has made a presentation on ECL. I talked to the past president a few days back. He says, is it? I said, we'll spread awareness about that. NFRA chairman has made a presentation on ECL and people he meets, he personally interacts because this is a pre-formative phase. It is to be implemented later. Anything, course correction or improvement we can have, they clearly want to engage with us and our institute. It is happening at various levels. But the main thing is the stakeholders and the bankers they contribute and forming a view before it is implemented is really major. Each component is there, whether it is agri lending, whether it is rural lending, whether it is stress assets or suddenly impairment. So now we have a large panel. I would request Mr. M. Narendra to set the ball rolling.
Yes.
And he has a wide experience and a widest number of topics and inspire others. And then we do deep dive into each and every topic, all practical issues. Let us discuss. It will be most interactive session.
Yeah.
Presentation is only a few slides to set the ball rolling. But ultimately, we want to hear your views and feel free. So, but on critical technical issues, because remember, it has to be a focus of research. We continue doing research. Yes.
Okay, thank you, Manoj, and all the others here, and all of our valued attending as a delegate. So, Mr. Manoj, is a very much enthusiastic. He has added all the available subject in one. So it is, yeah, but there is all interconnectivity. Suppose it is an RBI annual report or in financial stability report, or RBI when they come with the credit policy, or that is a BS, must be knowing BS, Bank for International Settlement. They also issued annual economic report. Now, all of them, when we see, there are certain global risks. So one major global risk is what now? Which is the major global risk is the geopolitical. And the geopolitical along with the energy risk. So just geopolitical was the one area where it will disturb our supply chain management. It will also result in high, because of the sanctions coming. Our USA put sanction, like Russia, they put the sanction with the result 4.5 years. Still, Russia-Ukraine war is going on, and now most of the Russian refinery also being attacked. And Russia is thinking that we will take the oil from India. Instead of earlier, we were getting the oil from Russia in a discount. Now Russia recently, they have their refinery have been affected. So that is the one area which gave a lot of difficulty to the global economy. Earlier to that, we had the your COVID-19. That was another thing. And earlier to that, we had the financial crisis of 2008, all that. So it is a little, what you call, on the globally, we are not being allowed to prosper. And this Middle East crisis again, yesterday again, our US president has said that ceasefire is over. We may have back-to-back talks, but we'll continue with the strike. 2 days, 8th and 9th, he had a 80 target attacked. And of course, the defense by Iran is attacking the American bases in the Gulf. And but whatever they thought Iran will surrender, that has not happened. So that is where each one wants to stop the war, but they are in the apparent way, they are not able to stop the war. So there Iran wants to establish what you call their supremacy in the Gulf, that state of what you call, yeah. So whereas America is through Qatar is developing another alternative passage. With the result, whenever they are using alternative, these people are warning them, and that's how the last 3 vessels or ships were attacked. Now, earlier we have seen India, in 1991 or sometime, even when Manmohan Singh was there, the oil per barrel went to 140. That was the mostly on a speculative trading and all. And with the immediate result was India became a fragile country. Out of the 5, India became a fragile, and our growth rate came down to 3.5% in the end of the rule when the 2013-14. Now from there, whatever may be the new statistics and all, we went into the growth rate of 8.5%. But earlier also we had earlier gone. But during COVID, our fiscal deficit went to 9.25. From there, with all the judicial fiscal method, India brought this fiscal deficit to 4.4. Now, earlier, some out of the balance sheet entry and all were not figured. Now all have been corrected. So that way, we are in a little better position to face any challenges. Now, if this 110 dollar per barrel, definitely lot of foreign funds have outflow has happened because India was trying to do the basket of around 40 countries we are getting the oil, and average cost was still it is around 95 dollar per barrel. So with that result, that is much higher than the 60. When we got discounted oil from the Russia, it was already 60. So today, that itself, and with this currently again yesterday 80 plus. So whatever we thought suddenly that no, everything is okay, the government also released all restriction on oil or other things, gas, all that, it is likely. So in such situation, when we are dependent 85% on imported oil, this will be a permanent one risk it is there, which like Japan could pass through this. They had reserves for more than 2 years, whereas our reserve would be not more than 3 months. So today also paper has come, ONGC is going to increase their oil reserves. So this is the one major risk. That risk has been figured in the financial stability report or annual economic report or the external report or the IMF latest report. So IMF has been reducing the global growth rate, and the latest growth is less or nearer to 3%. So against the 3%, it will be most of the USA, UK, or Japan, they are all very in the 1 or 1.5%, and Japan and all even less than 1%. So that way we say that we are the fastest growing India. That fastest growing growth, but it is less than 200 basis already. In the sense, suppose we are going 8.5%. Today we are going 6.5%. This year, even though earlier it was estimated at 7.2, it is not likely. Even maintaining 6 plus also is slightly challenging. So this is the one major risk. Second, all of us thought the AI related investments, they are driving the equity in various countries. Only 5-6 stocks, they become the part of the major equity boom. Now some risk the globally is felt that whatever pursued benefit out of AI in terms of productivity, that may not materialize, and this high valuation may go down. And if the equity market becomes volatile, it will have impact on the real economy. So this is the one area they think. And second, a lot of hedge fund and private credit of NBFC and others have gone for AI investment. And if the AI company don't do, that investment may not be returned, or it will be their valuation coming down, automatically their security value also. So this hedge fund getting when our housing crisis came, through the hedge fund only they were going on funding. Means again a lot of already mortgage assets were getting traded on various loans. So that is another risk likely to come. But luckily that for us, in a sense, USA with all that are able to have a reasonably good growth. And even though their GDP, your fiscal deficit is very high, still being US is the what you call reserve currency, all our funds are going. So with the result, their dollar is always on a appreciating manner, 100 plus. So again that when we are having this type of oil price crisis and other things, our currency is not getting the required thrust. So we are depreciated more than 11%. And even in the currently also it is hovering around 95. So, but for the so much intervention done by the Reserve Bank. And Reserve Bank, they do the forward. They say around 100 billion US dollar forward they have done, which will become a liability for them when it is maturing. Then they have to necessarily have that dollar purchased. So for that, no, that risk they are slowly, whenever due date, they are adjusting. And as and when they are adjusting, it has an impact again on rupee. So in spite of the some of the currency of the other countries, emerging country have been affected, but we are affected very high. Since we are 90% oil, gases and all importing, our outflow is very high. Second, our export, various now, the global trade itself has come down. Over and above that, tariff uncertainty has been there. Second, in spite of the certain agreement and free trade, it will take its own time to fructify. So with all that, we are trying to still maintain our export. But one area of that is either you reduce your import so that your fiscal deficit, your balance of payment deficit will be lower. So, and your the current account also will not have so much negative. So that is where currently our import is becoming a problem, and that is where the gold import has to be substantially reduced, which is not adding anything to the productivity. So that is our drainer on foreign exchange. So then other than that, oil again now, any our effort to improve our alternative energy, like your wind or solar or your what you call other nuclear power, or even from the water, hydrogen power, all that. Target of the government on the net zero, whatever they have put some target and all, that intensity we have achieved much in advance. But the rate of growth of that energy getting into the proper transmission mode and also storage mode, we need to spend a lot. So today, in spite of our best efforts to go alternate energy, our dependence on fossil fuel also going up. Now, if that is going up, and we have electrical vehicles, we have so many other methodology to, and that's where the 20% ethanol has been blended into the petrol. Today, just I put my petrol in my car. I asked him, "आपका ये 20% है, वो तो बहुत दिन से है, हमको बताया नहीं." नहीं, अभी because the government is saying these are all bogus, negative things they are talking. It doesn't affect and all. But one area I heard that ethanol per se will not help you to improve your speed or anything. Other than the negative effect, it is just to say that you got that much petrol, but out of that 20% is ethanol. So as a result, our indigenous ethanol can be used, but it is not in a way fully, but the government is committed. Next again, they will come with the E20 to another higher and higher. So that is the one energy. So these are the risks as far as one is export also not going up. Third, in another important is AI related investment or AI related awareness. India was little late. We never thought AI will become so much important, and that is driving the what you call market elsewhere. So we are in the beginning of, because all along our service export, particularly IT, had a supremacy, but that was mainly on the what you call arbitrage of labor. Our labor cost being lower, we were able to provide the services at a cheaper there, and the global companies used to take us in all respect. But today, if that itself, or writing of the code, any package or what you call your innovation, if itself is done by AI. You remember, no, sometime back, IBM share prices fell down because Anthropic, I think, he said, I can replace all your code at a very cost less than, and your model will be out of market. So if that type of risk being there, so but only thing is we have a good trained skill manpower, and those who are still are going on AI related manpower, then we can be a good source of such human resources in the international market, which will continue. But for the America bringing so many restriction on our people coming there, immigration rules are going on changing, that is a separate issue. But on AI will likely to remain, and AI will replace some of the manual work. and the migrate, what you call, we have to necessarily catch up with our innovation. That is another thing. So with this type of risk, the financial stability report, particularly in the current scenario, major another important is climate risk. So with all that, the climate is going to be very, last 4 or 5 years, it has been the world highest, what you call, highest heat. You know that in England and European countries, people are dying. 1,300 or so many people, 3,000 people died only through because they are never used to a 40-degree, what you call, climate. Today, whereas we can survive there, but they cannot, and they never have an air conditioner of that nature there. So with the result, Gulf may be had. So this is another issue on agriculture and on our what you call pattern of our what you call rainfall. And over and above that, India has this year, next year on El Nino, which can result in either no rainfall or excess rainfall. So many cloud bursts taking place. Our very productive created assets are washing away without, and we don't have that much money for revival and recovery. So either with the adaptation and mitigation, we need a lot of money, climate finance, which is again globally it is not coming. And whenever we had gone, our in the COPS meeting, our Indian people said 1.2 trillion US dollars we need the money as a emerging countries, but they are been able to promise only $300 million finance, which again in small they can come. So another damage fund was clear, damage and recovery fund. There also the extent of money required and vis-a-vis the promise are very limited. So in spite of meeting on a yearly basis, actually India had a plan to do that meeting. Then in 2028, but India withdrew. So that itself was a little surprise. India is the propagator of net zero, all that, but why did India withdraw from that, conducting that international COPS conference? So that is also, this report is what you call stress testing with all this global risk, domestic risk, and then arriving at the base case scenario, how are we placed, and with the what you call one type of two adverse situation, where will be. So now our capital adequacy is 16.8% of the banks capital adequacy in the base case, or currently if it is other two scenario, it can come down to even less than 13.5%, or in the other what you call the minimum 11.5 उसमें भी कम आ जाएगा. And but question is, this is as per the overall. मेरा एक article LinkedIn में लिखा है, against that, suppose you are from Bank of Baroda or who are some other bank, all of them, all आपका, you have to put stress testing that indicators to your bank scenario and arrive at where are we, because in each bank the situation may be much worse. So the predictive analysis karke, we have to see where are all the strategies to bring to reduce that such risk and be prepared. Like this, even though today we are at a very lowest NPA, 2.8% NPA, and net NPA much below 1%. But it doesn't take time for all the capital adequacy to go, but with the top 10 accounts or top 15 accounts or something going bad. 2013, 14, all that infrastructure, all that were in the presumption of India will grow 8.5%, 9%. Today, again, some of these projects and corporate, why the corporate not coming for investment? In spite of all the growth, whatever is there, they have a cash surplus, but they are not spending anything. Government gave a lot of tax concession, thinking that they will come. They are not investing, except on the small infrastructure and solar and other, that your chips, semiconductor chips, and some new sector, they may be coming big, that too, 2-3 big people. Beyond that, expansion is not, on the EV vehicles, it may take place. So if that is not coming, and sometimes the corporate cash surplus also can evaporate if the growth rate goes below 6%. You have to be prepared. If the growth at 8.5%, one presumption. If it is 7, it is a presumption. If it is 6, or if it is 5.5. So in those presumption, corporates also may not perform to the required extent. Then the market is also not for raising proper resources, or the debt market may not be so good. India suddenly, we wanted a foreign exchange because our currency, even though we have 679 billion US dollars, it is sufficient for 10 months. But the Reserve Bank would have predictively analyzed, if I have to lead my forward liability, as well as to maintain the orderliness in the currency, these 10 months or 11 months may not suffice. So that what Raghuram Rajan did, that formula they brought, where foreign currency deposit you bring from abroad, either by their own hedging, you give your own standby letter of credit there and let money come here. They have allowed our banks in abroad, you can give the standby letter of credit on the deposit there, and again the money can come here, or the deposit you take a loan there and bring the money. So with the result, I will meet the cost of forward, 3 to 4% I will meet. So the effective return for the such depositors is much higher. 6% is FCNR deposit 3 year, plus this if you add the forward. So it is around 9% return. So we expect 50 billion to come. Second, any financial institution, including banks, if they are, or some of the government related institution, if they are borrowing from abroad, 2 billion, 3 billion now, that money also Reserve Bank has agreed, I will do the swap cost free. Not for every corporate, but for IRFC or such of the government institution. So why that has to be done? That means, because even when such things are happening in Gulf, NRI deposit also may come down, and they may see risk here also. They may not. So with the result, it is better to straight away bring this money. And tomorrow, I think, Finance Minister has kept a meeting of the bankers. You have to enhance this FCNR mobilization. So these are all the why these are all happening is, what I mean to say, either at the government level or at the regulator level, they are pursuing certain risks. So if they are pursuing this, either a corporate or a financial institution or any other individually also, some of those risks you have to pursue. So the financial stability report is on the macro level at the country level, or means similarly it will be at the individual institution level. It can be at the corporate level, it can be at the individual level of you also. Suppose you are thinking of high spending, and you have been taking leverage, lot of loan. See, that's why the Reserve Bank, another thing, earlier, brokers, they can leverage their holding of bond and equity, and they can borrow from the bank. We had given in Bank of India, everywhere we have given against them certain security. And today they have said, if they have to borrow from there for their proprietary or hedging or proprietary trading or margin calling, it has to be 100% cash. Then only they can borrow. They have to give 100% cash security. Why will give 100% cash and again borrow? So what I mean to say, in everywhere, because even earlier SEBI guideline to restrict individual options and future also, and a lot of rationalization took place. And there are big institutional such people. What is that company, foreign company one? No, he made a big money. And then they put a little ban on Jain. Yes. And at the cost of all individual, they would have lost 80,000 crores. And against them, somebody else make money. So what I'm taking, leverages also will have to be planned. And otherwise, it may happen, suppose the perceived income of individual doesn't come. Then all the retail assets which are considered as good now may also lead into what you call loss. Second, gold loan. Gold loan, when the gold loan prices are volatile, whatever gold loan for individually you have taken, if the price come down, you have to replace that again with the gold. And otherwise your gold can be extinguished and loan can be closed. So that is another area RBI has given new guideline. Third is unsecured loan. इतना unsecured loan सबको यही मजा है. MSME हो, सब हो, unsecured because they don't have the capital. Capital के लिए they take the unsecured loan, and but that money he has brought, if it is a proprietary concern, no, family बोलेगा मनीष चंद बोला मेरे लिए कार मांगता है, somebody मांगता है, तो इसका ही money withdraw करके he has to oblige his family. But I'm just telling you have to all chartered accountants, no, has to oblige MSMEs. That is they have to make a clear differentiation between the business money and excess money out of his personal any other saving. Because without that, if this goes into all that, tomorrow that unsecured loan, when he has to return back, he is a failure. So that is why RBI have been telling your unsecured loan, very corporate taraf se, individual taraf se, MSME, kids se, it should not go haywire. And the growth rate was brought down after the circular and all. Even then, that is another risk. Third main structural difficulty is bank deposit growth has been 10 or 12%. Because most of the money are going to the mutual fund. But it is in the industry again that money will come to the bank. But all that, I think the saving habit of the people have come down. Whereas RBI report starts that the private debt of the individuals have gone up. So we are just like past following the American economy. America may or abroad may care, it is a spendthrift economy and they also take private credit. But in Indian context, savings are the source for our resource mobilization. So abhi, most of the banks are replenishing that deposit through certificate deposit. Usme bahut costly hai. So plus they are also borrowing from the term money from the or infrastructure bonds and other things they are borrowing. So resource mobilization 10-12%, whereas credit growth has been 15%. Ideally, if your real growth is there, credit can go up to 20%, 19-20%, because then only you can, because there is a definite connection between your credit to your credit to GDP should be higher. India may it is only 55-60%. Globally, it is more than 160%. So we have a long way to go, but our structural difficulty of resource mobilization, we have to find out ways to see. Otherwise, CASA has been the major important factor which used to give the bank a lot of cost saving. Now that money is very short now. It is not too ultra short. It is not remaining so fast. Money आया तो हमारा साहब का इनका अकाउंट में आया तो immediately there are 3 stocks. Why not you invest? Correct, no?
Right.
Yes.
More than 3. I have 300.
So with the result, bank में पैसा रहते नहीं है. तो इसके लिए पूरा lot of efforts have to be done. So I think I'm a financial stability में these are all the major points. In spite of that, we are aiming at 6.5% growth this year. And IMF also, everybody says India is the fastest growing economy, but it has to be in reference to our potential. Suppose we are potentially to grow 7.5-8%, and we are growing at 6.5%. That means certain drivers of economy are getting affected, and we are not adhering to that. उसके बाद अभी ये है ना expected loss he will cover because he is there. But only thing is public sector commercial bank में only a delay हो गया. This has been already implemented in NBFC because all along we had a difficulty इतना वो सब perceived risk or what you call futuristic risk. When you discount that with the current rate, and if you find their whatever money is not suffice to pay the loan, then you have to make a judgment that this has already started showing a risk. So with that, even a performing asset, you have to make provision. And only thing is in that earlier it was 0.4, now it is 5%. On the standard asset only you have to make. So stage 1, stage 2, stage 3, that is only on the what you call your real value theory. Even on the liabilities, suppose current liabilities are at a particular rate of interest and your view is interest rate is likely to go up. If that is the case, when it is maturing at the higher cost you have to bring, then immediately higher cost ka or present cost ka difference you have to make provision. Similarly on investment, Fair value. Fair value will be the theme. But I think 30 to 40,000 crores may be the requirement from the next year, April to 2027. And as rightly said, Indian Bank or some other banks already started making provision. तो फ्लोटिंग प्रोविजन है, बट एक इसमें ऐसे ही एक साल में हमने इकोनॉमिक सीनरियो और हमारा एजम्पशन सब देख के portfolio wise as well as individual account wise, we arrive at the particular level of what you call provision made. Then having in another scenario next year, if the situation improves, automatically aaj ek kam lene ka hai, big hit. But futuristically, suppose you are able wise and you have managed well, and economic also is favorable to you, that money which you have made becomes the excess. So in view of that, then the rate of because we have seen in some of the companies, the rate of requirement will go on reducing. But the one time it will be higher. And now this is the right time. ये तो delay किया. आज का दिन में वो ये less than 1%. Provision coverage is around 80 to 90% already done. And some of them maybe even almost nearing 100%. Net NPA is very low. Capital adequacy is good. Except economy is not so good. थोड़ा इन्होंने introduce करते वक्त ये खोला ये global का risk सब आके, it is now I think banks will be little cautious also. Lending भी इतना aggressive नहीं, अभी बहुत साल से अभी they have become little cautious, and that has helped them to control the bank, and bank were able to give very good profit. I think industry as a whole 2.35 lakhs crore, and they gave a very good dividend. And India, हमारा इनको भी Reserve Bank gave 2.114 lakh crores. In spite of that, अभी recently in May में, India has already met 92% of its fiscal deficit target. So, but then they said, oh, हमारा tax recovery and all no are yet to come. So we have this only government spending 12 lakhs crore and around 3.5% of the GDP for investments, infrastructure and all. Now they are likely to include in that other term infrastructure and other money which government is including, so that it will really reflect the government investment. But that pushing the economy may not be the always answer. It has to be through private sector and all. So our productivity and with that is where industry 4 से industry 5 आया अभी. So industry has to become productive. Everybody has to think of, then only our stable growth that will come, because the world may be that there is that what you call SDG target 2030 में reach होने का है, to remove hunger, to to see that everybody are taken care, women or climate risk, all that at the rate of so much on the economy in the globally, and quite often we are not likely to reach the sustainable development goals. Then all that good things. Another thing is multinational institution like IMF, World Bank, all of them, they are also becoming weaker without the necessary capital support. उनको भी अभी अमेरिका एंड ऑल सेड वी विल नॉट बी हेल्पिंग. उन्होंने बहुत सारा ऑर्गेनाइजेशन से हमारा ट्रम्प ने विड्रॉ किया, एंड क्लाइमेट टारगेट हम मानते नहीं बोला है. तो विद द रिजल्ट दिस क्लाइमेट का रिस्क फाइनेंस देने में कोई इतना आने वाला कोई नहीं. दूसरा, ड्यू टू द आई एम जस्ट कवरिंग द NATO नॉर्थ अटलांटिक ट्रीटी, इसका मीटिंग हो गया ना, तो अभी तक है ना इन्होंने इनके लिए सपोर्ट था अमेरिका. कुछ भी तकलीफ हो गया तो यूरोपियन कंट्री कैन लुक टू अमेरिका, एंड अमेरिका यूज्ड टू सपोर्ट देम इन द डिफेंस and with all the bases there. Now America says you also increase your defense spending to 5%. They would be spending around 2.5. So unka economy already affected है. Most of the money will go for defense preparedness, whereas other priorities of development and other things will suffer. If that is for the developed country, then what will be the impact on the less developed and lower income countries? So the one more important is public debt. इतना डेट हो गया, डेट से डेट में इकोनॉमी है, उसका डेट का रीपेमेंट आल्सो बिकमिंग स्ट्रेस्ड, एंड द मल्टीनेशनल इंस्टीट्यूशन आर नॉट लाइकली टू गिव एनी grant. They will be, or go any other developed country are not giving grant. Then they have to again borrow. So borrow circle है ना. इसलिए India भी said that my aim is 50% public debt in another 2 to 3 years. I am not having fiscal deficit target. Now we will bring it down. And against that, another maybe it should be both center and state if 50%. Whereas currently it is 80% plus. And center ko, state ko 3% of the fiscal deficit. And some of them, not all the freebies they give during the election and all, no, for the any chief minister, it becomes difficult to maintain that because that much money is going without any capital expenditure ke liye nahi hai, so automatically public utility, all that will suffer. So the government is also going to, because one country like Sri Lanka, how they went into difficulty, all of you are aware, I think. So if that is the case, such one Sri Lanka is one state here. If they don't maintain like that, tomorrow there will be a problem. So this is the gist of all this I'm telling. But one thing is Indian banking system over a period of 3-5 years have become very stable and they have continuously done good risk management, provisioning, and he is the financial controller in the Bank of India. All of them, they were very strict as far as the financial ratios are concerned. So today, whichever market stock of the banks, it is ideally that all of you invest because it will be definitely, maybe short term, 3 years, 5 years, it will have a very good valuation. Thank you. Abhi, he will.
Thank you very much.
But I will be requesting you.
Continue now.
Yes.
Everybody.
We will have a brief for this. I want to open this to all.
Very good, very good. I'll give only brief for it.
Yeah. So that everybody has, we want to hear Mr. Associate.
Yes.
Just starting with, there are so many.
Yeah.
People have already been, they have so many queries.
Correct.
So I don't want anybody to be unanswered.
Correct.
New topic.
No issue.
Few thoughts from you to start with.
Yes.
Then Rajosek will
Yeah,
speak for about 7 minutes.
I think he will be mostly talking.
Parth is also
initial, no?
there.
Yes,
Yash is there. We'll have many.
Timing is just so that.
Yeah. We will see that the greatest takeaway is there because it's difficult to get so many people together on the same day at the same time.
Manoj, just can I ask question from Mr. Nare?
Later.
Note
Let him
kariye,
start.
note kariye. Baat, please.
Yes.
Now, Mr. B. Kumar, multidisciplinary management also and multiple qualifications.
Yes.
And not only that, before being a CFO, Chief Risk Officer.
Correct.
So he's inside out risk. Now having the CFO position and also in a large Bank of India. So he has agreed to answer all the questions. And besides Brazil, I told him besides his involvement, he will also ask many questions. Parth is here, Vijay is here, M&M Finance, Geopolitical, Bank of Baroda, and we have told them not a single question on ECL, deep dive, whether it is banks or NBFC, maybe they can answer on their live experiences and NBFCs also. Sir, over to you.
Yes, thank you. At the outset, I would like to thank the BFSI Study Circle of ICA for inviting me for this today's study circle meeting. And I also thank our Narendra sir for
Study group.
Study group. And also thank our Narendra sir for giving such a lengthy speech and covering the overall topic. Started with financial stability report, RBI annual report, financial governance, risk management, audit committee, ECL, FCNR, such a wide topic he has covered. And also he has coordinated everything in such a nice manner. And I also like to say that I think back to back I am also part of this particular meeting because recently in Lonavala there was a CFO conference where I was also one of the panelists, where we had one of the panel where I was also there, where our president and vice president were there participating in this conference. It is a CFO conference organized by ICA, where ACB chair, CFOs, ECAs were there. That is also there. So it recently happened in Lonavala, June last week. So now coming to the one of the topic with regard to this ECL. Like ECL, like Sir was telling, I'll just give an overview only. After that, we will be going for interaction. Like Sir was telling, ECL is not a new subject or new things which you are going to do it now. For example, if you can able to strictly speak when, because I was recently last 3 years, I was in CFO in the finance department. Earlier, from 2005 in Corporation Bank, subsequently 2008 from Bank of India, I came. I was all along the way in risk also, and finally ended up with CRO, and finally moved to CFO thing. Where in 2008, when bank has all implemented the Basel II guidelines, that is the basic indicator approach for credit risk. There was a clear instruction from RBI in 2012. Bank should be prepared for migration to the IRB approach, that is the internal rating based approach. There will be two IRBs. One is the foundation IRB, next is the advanced IRB. So the foundation IRB, PD has to be calculated by the bank, LGD will be given by RBI. Advanced IRB, they told 2015 you have to migrate, and 2015 LGD also will be calculated by the banks. At that time itself, they given everything. And we in 2008, when we rolled out this Basel 2, banks are migrated from Basel 1 to Basel 2, particularly in India. So we always started preparing for our ECL. And we were all put the system in place, consultant in place, software in place, everything was there. So when everything was progressing well, 2009, 10 and all, suddenly this in between the 2008 subprime crisis came. After that, what happened? 2009, 10 onwards, people started questioning BIS committee. When how you can able to what the Basel II risk insist of all overall entire world has implemented Basel II. Then in spite of that, how this risk has come. So what RBI suddenly BIS has come with a approach paper on Basel III, and immediately further to go into the further process, and they told banks to adopt, and like that the stages. Finally 2013. 2012, almost final guidelines on Basel III has come, and some banks started adopting. So we already banks in India from 1/4/2023 onwards. So Basel, that is June 2023 onwards, to 2013 onwards, banks has to implement this Basel III guidelines. Because of that, because of this particular process, this ECL has kept into a back foot. Yes, sir.
For some time it was kept. Yeah.
So 2000, otherwise our 2012 originally, if you strictly Basel III has not come in place, I think we are all ready for foundation IRB, advanced IRB. All the things are ready, but not only here for credit risk and for the operation risk also, we want to go for advanced approaches, AMA model, everything, and similarly market risk also. So all the things were evolving period. This Basel III has came, and it took 5 years for transition. In between, various other risks has come, AQR has come, various things, and finally we got 2020 or 2021. The full Basel III has been fully implemented. After 2021, Basel III has implemented. So then RBI COVID has come, everything. In spite of that, they given some extension. In 2021, almost fully Basel III implemented. RBI start thinking over, or otherwise, first of all, the Companies Act, particularly this from this regulator, they thought, okay, well, when we will start this implementing this Ind AS or otherwise IFRS guidelines in the bank in India, first of all. So then they started with the companies with the higher turnover, lower turnover, then everything migrated NBFCs. Then finally, lastly left out was only banks and insurance companies. These two are the finally left out process when we will get it to roll out. And finally, suddenly one day message has come, 2016 onwards, 2026 onwards, insurance will adopt the ECL guidelines. Sorry, they will migrate to IFRS itself. But you also get surprised how far insurance, because we are also having insurance subsidiaries, how far they are prepared, we also know, because we on and all, we are also interacting with them. But then they given, finally they come with their guidelines for them, that they given were defer it for one more year, and then 1/4/27 they will be migrating. And then since they are migrating to insurance companies, migrating from 1/4/2027, so then RBI also thought confidently that, oh, yes, banks also now, like Sarah told very clearly, NPA position is very good, profit is very good, and otherwise other provisioning the ratio is very good. Everything they thought, okay, from 1/4/2027, we also will make an attempt for this particular process. And they asked from all the banks, how far your preparedness? As far as the preparedness is concerned, as I already told you, we are all from 2012 onwards, we are waiting implement, systems are in place, people are in place, so everything is in place, then we have no any issues. Only thing is that when you adopt this particular process, how far we are going to do this particular ratios, how we are going to handle, how our books look like. But one good thing was that RBI from 2021 onwards was telling the banks to submit the pro forma index to the parallelly to the RBI. Earlier it was on a quarterly basis. Then after that they told half-yearly basis. Now also till date also we are submitting the pro forma index financial statements. After we submit our result, they give us another 45 days to do this particular process. And we are submitting them the result based on the research. They also discuss with everything. And finally now the guidelines has come. Originally draft guidelines has come. A lot of feedback has been given to them. And final guidelines now has come. So in this process, only one thing I wanted to highlight, in the, like sir was telling, this stage 2 which was 0.4%, in stage 2 you have to keep 5%. In this case, what only my thought process was that recently we had a Nepal banks delegation, all have come to our, including the regulator has come to our bank to interact with our the best practices. So at the time we asked them when they migrated to this particular index and all we had. So they, at the time they were telling to us in 2023 they migrated to this IFRS guidelines and the thing, and then we asked them, we have impacted for this particular process. What they were telling was that their regulator from the very beginning, what they were telling was that this particular impaired assets, particularly the stage 2 assets which you are calling SMA portfolio, by default also they have to keep them 5%. There is no any 0.25, 0.4 or something. So when they migrated to ECL, they got some write back of the provision. Then they wanted to make the additional provision they told. In this case, what I want to tell is that when RBI also planned us well in advance, one thing they might have alerted maybe 23, 24 onwards, maybe 2%, as again 0.25, 0.4, maybe they can told us to keep 1%, 2%, slowly they migrated. And they increased it to now to 5%. And now many of the anxiety with the analysts and all, sorry, sir, you always ask what is the impact on this index on the bank. This is not, the question may not arise because had they told us to keep this particular process, you have to keep this particular additional provisioning. So then this question today may not arise, but actually like now, that is one part of the story. If they told it is an international scenario, but coming to us is concerned, banks are voluntarily, some banks are keeping their provisioning. And good thing was that in these processes, with SMA2, SMA1 monitoring as strengthened, because earlier what happened, no? Today's borrower's mentality, what will happen? No, he is also a businessman. What he will do till 89th day onwards, he will use this money for rotation because it comes at a cheap cost. He is least bothered whether it is SMA0, SMA1 or SMA2. So you make rotation on 89th day, 80th day, 89th day, you will come and pay, so that no, you will not account become NPA. Here only account become NPA, there is a deterrence now. Now, what in future, what will happen is that now, since I have to keep additional provisioning on SMA2 or SMA1 because of the credit impairment, now I am going to charge the customer for this particular process. This thing which they will have an education among the customers that yes, in future this they are going to keep this delayed payment for this particular process, they are going to be charged. So far, I am not keeping any additional provisioning on this particular process, where I am keeping a minor provision of 0.25, 0.4. Now I am going to keep it additional provisioning. I will have to charge the customer, then the discipline. Had this particular process had come, as I told you, some 2-3 years before, maybe in 24 or 23 itself, they might have slowly increased. We might have brought some thought of a discipline among the customers. That is my only point. But ultimately, what is going to happen is that bank will not be any point of time out of pocket. That I want to tell you because some of you are there here. Because what we'll do when you are going to keep the additional provisioning on this particular process, I will start charging from the customer from 1/4 to 30th June 2020. Then I have to keep additional provisioning on my SMA2 thing. If he is not going to, we'll tell him, we can give an advice to him to make this particular payment on or before 30 days. 31 to 60 days, this will be the additional you have to bear, and 31 to 60 days, additional bearing you have to pay over and above. That is going to be the order of the day. So with that, what will happen? No, which was great discipline, which was not there to bring in the system, that will be in future, this particular process will bring in place. So this is the overall evolvement of this particular process. And if we ask for the banks, are they prepared for this particular process to process? Yes, we are very much prepared. All banks are having their own consultant in place. Mostly this ECL and ER part are handled by the risk management department, and finance department is coordinating. They are also told to form a committee, coordination committee at CFO and CRO level to implement this particular process. But strictly speaking, as I was also CRO, this particular process, because macroeconomy, everything, they do a lot of analytics.
Yeah.
So they should, from their department, this particular thing comes to the finance and they put in place because they have to answer to a lot of regulatory questions. So from their perspective, better we also thought many banks, this is what the process happening and people are doing. This is the process. I want to stop here so that no what no we can able to further ask any questions other we can take it.
All of you are aware of US GAAP accounting. हमारा corporation bank में we are a private sector bank. We were not required to do our accounts in US GAAP. For 5 years, we did in US GAAP. US GAAP means all fair value concept. That is where I said even a liability also will be valued at the current value. Even assets will be valued at the current. Second is provisioning is not an incident happening. Provisioning is the perceived risk of default on a judgment basis. That even investments with the market risk, what is the likely scenario, then you have to make. So this gives, there is a comprehensive income or comprehensive no income. With the whatever investments may we find that it has a fair value, this much amount of additional valuation. That money will become part of the net worth in a comprehensive income. अभी आपका NBFC में सभी already है वो. But if there is again a loss there, that will negate the comprehensive net worth. So your income, that means your net worth will come down. So it पहले क्या होता था? Held for one is held for trading, held for sale, and held for maturity. Maturity को fair value करने का नहीं, because there may be hidden benefits, there may be hidden risk also. In this India AS or US GAAP, you have to do that also on a perceived what is the fair value. Similarly, your currency position, fair value. In everywhere that will be applied, and against that either the provision plus or provision less or additional income which will be part of the net worth. It will not be added to the profit and loss account. वो एक better है. Suppose आज ये profit loss account add किया, but trading में held for trading and held for sale will be a current assets. It is not a long-term asset. So that current asset or current stock, that will be valued, and there if you have a profit, it will be added to the profit, and it is again subject to tax. Yep. Because that no, you are not realized, but it is only a perceived profit which is there. भाई आपने टैक्स भरा, बाद में नेक्स्ट एक महीने में पूरा डाउन हो गया, आपका टैक्स भरा कोई फायदा नहीं. तो ये सब बैंकिंग में थोड़ा है. And NBFC are, because they are a portfolio investment and all very limited. Only whatever required as SLR, that only they are doing. Beyond that, उनका कोई trading नहीं है और कोई profit investment नहीं है. Bank में ऐसा नहीं. We have a pursued profit zone like cross currency, currency or equity or gold. Gold में also we proprietary trading as well as the limited is pursued as a proprietary. Then on your consignment basis, we bring the gold and give it to the customers. So in all that multiple government debt ka maturity and what do you call this ka maturity profile, then your modified maturity profile. Again that when you do, automatically what is the market risk you are carrying in your invest come to know. And that market risk you have to make it fair. And automatically we have to show it in our balance sheet. So lot of calculation, as he said, what is the probability? That's why you need to have a technology. ये सभी है ना, either portfolio basis में retail and smaller accounts we can put on the portfolio. Portfolio में हमारा US GAAP में क्या करते हैं, last 10 साल में मेरा portfolio कैसा move किया था, उसमें what are my probability of default and what are my loss given default or my that calculation I do. Or sometimes it was told by, as he rightly said, industry level RBI will give or IBA will give.
Yes.
Or IBA started a separate organization to give this data. Yes. They have to give. So then, because I don't have the industry level benchmarking, मेरा पास नहीं है. So ये सब करके then either on the, but big corporate and all, that has to be individually. अभी पहले क्या इन्होंने बताया वही है, आप पूरा रिस्क दिखाओ 90 डेज में आप पैसा भराओ, भरने के बाद आपका अकाउंट एनपी नहीं, रियली वो अकाउंट में ना कोई ट्रांजैक्शन नहीं है, कोई ये नहीं है. हम अभी ऑडिटर के पास और ये सिस्टम में he will say इसको फुल प्रोविजन करो. It has to be done because that he is already diverted or he is affected or market he doesn't have the means. somewhere borrow करके भी इधर एक बढ़ते थे, वो आगे से नहीं चलेंगे ना. So we have to, as he rightly said, either you educate the borrower or he charge him extra because हमारा capital charge भी और ये सब है ना additional जाएगा. So we have to charge him. That is a perfect method he said. So इसका but interesting है, all these subjects are very interesting. And as you said, if the overall risk management and overall economic scenario और RBI का various forwarding paper, ये सब देख के एक हम assumption करना पड़ेगा. ये assumption is on macroeconomic factors, and that assumption with your own data and maybe the data given by external agency, you put in your technology, and through the technology, either on portfolio basis or on individual account basis, I arrive at what should be my additional is the economic loss which we have to provide. Even अभी NBFC में आपका कोई डेटर्स है, सिंपली आप डालते डेटर ही नहीं है, वो आते भी नहीं है, all the loss you are providing, correct? No, even corporate also, all corporates are providing now, they have to work. So that key risk are becoming more important, and that key risk in the form of ECL, it will be provided. I have seen ultimately that provides us very good ground in terms of strength of the balance sheet and the resilience of the balance sheet. That will help. Okay, correct.
Thank you very much. Now, Mr. Rajasek, 5 to 7 minutes. Rajasek has done a lot of research. I know he can speak for 2 full days on this. And brief perspective from research point, he has been engaged with the regulators, RBI also, NFRA also, and also deep dive interaction with IBA also. 5 to 7 minutes from you. Then we have Jayesh, we have Gobind, we have Harish, we have Vijay, we have Parth, we have many more. So we will listen to all, and of course Rohit and my perspective will also come in the end. Yeah.
Thank you so much. I think pleasure listening to all. Hi, my name is Rajashek. Maybe just a quick as a precursor to the conversation, I was a part of the RBI committee which came up with this ECL circular. Putting in context, the ECL circular came on 27th of April. Why am I calling out this date to be specific? Because while we are emphasizing on this ECL circular, which focuses on loans and receivable, there are 14 related circulars that has also got amended pursuant to this ECL circular. One of them being the investment circular. The investment circular actually came about in 1st April 2024, which got amended to bring in some attributes of fair valuation, effective interest rate, as well as EIR. So I just want to bring some context with respect to this. Firstly, thanks, Gobind. Gobind got me back to the institute after 25 years. I started my career with EIRC, 25 years, and thank you so much for having me here. So privileged to be. One thing I must have to say, as an institute, we have not engaged the way I see other regulators doing before, I get to the full discussion. I see NAFRA, I've had engagement with Nitin Gupta, not once, a couple of times with the webcast happening. Institute is not engaging. I am working with RBI, and RBI has this department of College of Supervision, which is essentially training the SSM, so this supervisory managers, working with DOR, who's working on the regulation. So I think perhaps we as a group, we need to be slightly up on the ante for 2-3 reasons. One is what RBI is calling out. There are many things which RBI is not calling out, which we are not addressing issues. To give you an example, this ECL is going to lead you to deferred tax implications. What does that mean from an accounting? Because RBI is not talking about that on accounting. RBI is talking about initial recognition, but it is not talking about if there is an off-market transaction that is being done. And to take an example, employee loan is an off-market transaction. You are always doing a subvented loan or an interest-free loan. Now, the typical accounting as per IS 19, which is employee benefit, talks about the fact that if you are going to give a 2% loan and the market rate of loan is at 8%, the delta between the 2 and 8%, which will be a reduction in the amortized cost value, ends up being a prepaid asset or an employee benefit. RBI is not talking about it. So I think perhaps as institute, my request would be, sir, since you're spearheading and others, to engage with the regulator. Vaibhav is the guy who's driving this from RBI, Vaibhav Chaturvedi. You see the signature from RBI who comes out, is the one who's driving it. I think perhaps to our view that should be that. That's the precursor of the conversation. Now, let me take a step back. In 7 minutes, I don't think I'll do justice, but
No, this is just a start.
Yeah.
Then we'll hear everybody. Ultimately, I expect Mr. Kumar and you and Govind to
so
answer all the questions of
what
everybody
we will
also.
do is we'll take topic by topic, if that makes sense. And like I said,
आपने आपका इंडस्ट्री वाइज एस्टिमेट बनाया आपका इसमें डिवीजन में कोई किया है
so just to give you some context, sir, RBI में जब committee में था, we had 18 meetings for RBI.
हाँ कमिटी में थे आप
I was a part of the committee.
वेरी गुड वेरी
And we had presented to that time Mr. Shaktikanta Das also.
को
And DG Rao was the one who was overseeing this whole piece around it.
राजेश्वर राव
Rageshwar Rao. Now, the point that remains to be there is, while we seem to take a lot of comfort around the fact that pro forma reporting was done, the conclusion on the fact remains is pro forma reporting was done very suboptimally. Like you said, sir, is, there was this whole computation on ECL. What is ECL?
Yes.
ECL is where I'm moving from this whole regime of incurred loss to expected loss, right? Under IFRS, you move from IAS 39 to IFRS 9. In the Indian regime, you move from IRAC, and by the way, we are not talking about IFRS. This regulation is called ACPIR circular. Asset classification, income recognition and provision circular. RBI is not calling it IFRS. So let's be very clear. So every attribute of IFRS is therefore not coming in. So when we got to that, there were way too many simplifications that was taken on assumptions on PDs with respect to EADs, with respect to CCFs, credit conversion factors, with respect to prepayments. And therefore, when we got to the real root of it, we realized that assumptions in itself does not translate to the real network implications. So
network implication, it was not
so
coming.
it was not coming in.
Correct.
Please, sir. What becomes important here, and perhaps this is a significant difference between what had happened between NBFCs and banks, and I think it's imperative for us to know.
Yeah, they implemented quite a long earlier.
One is implemented, but when IFRS got implemented for NBFCs, it got implemented as is. Here, when IFRS is getting and by the way, this is not called IFRS, investment circular is getting implemented, ECL circular is getting implemented, it is one getting in bits and pieces. Second, the NBFCs, when they implemented, they didn't get something called as a transition benefit. What do you mean by transition benefit? Transition benefit, typically one would assume that there is a standard called IFRS 1, which talks about the fact that when you move from an old gap to a new gap, you get an adjustment going to net worth. However, with respect to ECL, just to put in context, and Govind is one person who I revere a lot because of his knowledge of the subject, and maybe Govind should add on this one. When you move on the ECL regime, just to put in context, when IFRS 9 happened, we talked about BIS. Interestingly, there are a few papers I would recommend the group to look at. There were two papers issued called the GPPC paper. It's called the Global Public Policy paper, which was issued in 2015 and 2016. The Global Public Policy paper effectively talked about the fact that if ECL is going to come, what is acceptable versus what is not acceptable. What is acceptable in computation? What is acceptable in governance? What is acceptable in processes? That is a piece that is going to be called out, and I would strongly recommend you refer to that. The second, globally, as we have understood earlier from Sir, is there are two reasons why this whole concept of material misstatement arises, which is not a conversation we've ever heard in India in the past. Material misstatement means when you do reporting, but you've misreported, and therefore there is a requirement for you to roll back and redo the numbers in the past. Globally, there were two reasons why material misstatement was happening. One was account of revenue recognition, on how you recognize revenue. Second was on account of provision. So this is one of the piece. So therefore, in 2016, there was a paper that was issued by the Global Public Policy paper, which talked about how do you address risk of material misstatement. And third, since many of us are auditors, well, I happen to be a professional, but at the end of the day, we want to talk about the profession. How audit this becomes also an important attribute. And so again, just to emphasize, as a part of the RBI outreach, we actually called Big Fours, we called even the tier 2 and tier 3 firms. When I mean tier 2, just in terms of the size, just to talk about what is the level of awareness of even auditors looking at the computation, is auditor going to look at saying, okay, here is a formula, I'm going to check the formula. Will the auditor say, okay, if the PD is this, how do I look at a PD computation? And it can get as complicated to say a PD can be look at the time series of the data. I can use different modeling techniques. What would be the modeling technique? Do I apply a Markov chain? Do I apply a VBool? Do I apply a Vasicek approach? What is going to be the approach? And then, so there is an auditing standard called ISA 540. And by the way, that's what we have been trying to also tell NAFRA to do at this point in time in our discussion. Refer to this ISA 540, International Standard on Auditing, which effectively talks about one, how should an auditing of ECL look like? So that's the bit of a genesis around this whole ECL conversation. Now, and maybe please, if you could open up this discussion, because I'd like Gobind and others to also sort of comment in. First, let's talk about the applicability of ECL as a conversation. Where does ECL apply? The basic of what IFRS 9 and therefore what is the embedding of what has happened with respect to the circular says is it applies to financial assets, right? Now the question remains is what are financial assets and where does it apply? What it goes on to saying, and by the way, which is exactly where you should refer to this April 27 circular, it says look at loans, look at investments. Now it goes on to another very interesting thing. Look at off-balance sheet exposure. And
Welcome. Great, wonderful. Wonderful.
Welcome.
Hello. Wonderful. Welcome, sir. Welcome. Welcome. Wonderful. It's a miracle you are here.
Great, sir. Great.
First thing
It is our pleasure.
Yes, sir. Hello.
2 घंटा हो गया डिस्कशन मिस हो गए नहीं some other meeting also, no?
Rohit bhai,
Yes,
just
multiple
welcome
meetings are going on.
our chairman Saurabh Ajmera, then a few words from our chairman. Rohit.
And of course I am chairman.
I know, sir.
Hi, how are you?
आपका भी कार्ड देना.
So I'll not.
Rohit, welcome our chairman. A few words then from our chairman Saurabh Ajmera.
Yes. आप आइए किधर आइए थोड़ा साइड जाओ.
Yeah. Come, sir.
Hi.
Thank you, for joining this. We are actually very happy to see you might have seen the panel. We are very happy to have arranged Mr. B. Kumar, we have.
Wonderful.
We have Rasojik Banerjee. I'm making it very short. We have an obvious panel. We are discussing.
We also want to be very, very crisp because this is for the
So one very important
discussion.
thing which just immediately Rasojik indicated, the institute is not engaging. Everybody is engaging. Institute is not engaging enough on ECL. ECL is something that is very, very important for chartered accountants. I want to highlight the viewers. At least Rasojik, what you said, I immediately want to translate and.
This is really good. Well, while having a discussion with the study group, such type of feedback is much needed.
He's actually very clear in his indication. Institute is not engaging. He has given the RBI person also. So maybe I'm engaged with you. This can be a very good initiative from our side, from institute side. To look into. So I'm handing over to.
Yes.
And Saurabh, we have over 10 experts here who can be in a large conference. Bank of Baroda, Geo, Eminent Financial, International Bank, Private Bank, Public Sector Bank. You know, it's a really, and it's glad to have a full house tomorrow. It will just grow, but it is great. All thanks. And I mentioned to everybody about research, what you mentioned last time.
Yeah, we covered financial stability report, global risk. Then we covered the recent RBI initiative on FCNR deposits. Then we also covered the ECL. And now we are going to the round table and discuss.
So at the outset, I like to congratulate each one of you that you are doing such a great work in this study group. My compliment to Rohit and all the team. And today we have Mr. Banerjee, Sri M. Narendra sir, then B. Kumar sir, Jay sir, and it is really a wonderful feeling that our study group is functioning like that, where we are discussing for a lot of research, which is expected from the study group. Because in general, the purpose of study group is to have some discussion, and then such type of reports and development can be shared to the members at large. So probably you guys are doing on the same page, that whatever you are discussing, you are preparing some note also that we can share larger audience through my communication letter. As a chairman, I have to write address to every month in which we can incorporate. Earlier also I suggested that we should have some topic from this wonderful study group on which we can definitely incumbent in our newsletter also, which is very, very important to reaches out to masses, because our newsletter is a thing through which we can communicate to almost 2 lakh chartered accountant, and we do have student newsletter also, through which we can communicate to almost 3.5 lakh chartered accountant student. And this is really a good thing that our study groups are functioning such a proactive, ahead of the curve. And regarding the feedback of that ECL, definitely, sir, we like to have more and more program, more discussion. Furthermore, if any research note can be published, we are happy to host such type of initiative at WRC. And this year is really very, very special in terms of engagement, activities, and the networking, which we are flourishing, because this is 75th year of WRC. So I am very, very fortunate that I am representing such a great legacy into 75th year, where all the stalwart were past president, past council member, past chairmen. And the way WRC is known amongst all the regional is really a phenomenal feeling, because whenever we are going to Delhi, whenever we are going to Calcutta and any other space, they always feel proud for WRC. This is great thing for our own region, because we are known for the constructive knowledge share, effective delivery, and that is the most thing, probably most important thing in professional manner. So the same is expected from each one of you also, that whenever you are doing such type of meeting, do come with some constructive knowledge sharing notes, which we can share, we can reach to the maximum people. Because here we are discussing in a closed group manner for 40 people, 30 people, but definitely our discussion, our research should reaches out to the masses. That should be our object. And once again, compliment to Rohit for organizing such a wonderful program. We like to have more and more stakeholders in this BFSI group. So anybody is connected with our own members, those are doing really great in banking and financial sectors, we can definitely invite in this group also, as well as WRC also. So those are sharing knowledge. I want to invite at a larger platform, that is WRC. Anytime we can organize bigger program at a larger platform. And we are hosting so many programs this year. Today is my 138th day of my chairmanship. I am counting my days also, you can say, in terms of, and we have already delivered more than 125 programs for the benefit of our members at large. And similar way, we like to host many more programs. This year, we have already come out with the signature program of WRC, that is the regional conference under the leadership of Sweta ma'am. I think she is also here. My regional council colleague, she is Sweta Jain. She is heading a PD committee also, Professional Development Committee. And we are hosting the largest program of this year in terms of regional conference at Geo Convention Center, where we are inviting more than 3,000 chartered accountant members to have engagement, connectivity, collaboration, networking, and knowledge sharing. So for that also, if any suggestion from this wonderful group in terms of speakers, discussions, we are open for that, because well in advance, before 7 months, we have come out with the dates for the regional conference. And we want to create a very wonderful in terms of effective delivery, as structure, panelists, all will be there. So we are completely open. Whatever feedback you have, just let me know. Because, and one more thing, this is our own WRC. So ultimately, it is not only the responsibility of CS Saurabh Mehra, it is the responsibility of our whole chartered accountant. So if anybody want to take lead, I'm completely open, and WRC platform is really doing great in terms of working. And I like to have a few words from Vijender, and then Sweta madam also can address. And
that, my suggestion is that, as Mr. Banerjee has rightly said, that we need to interact more with the regulator.
Yeah.
We need to interact more with RBI for our own benefit. Right? Because we are going to be auditing, we are going to be on the other side as a CFO, and everywhere, all chartered accountants will be there. That actually our group can whatever knowledge or
What are the
whatever research
expectations
we
of the
are doing,
regulator from the
I think it should be conveyed to the right people. Otherwise, it will remain here. It is of no use. I think for that matter, whatever support which is required, this group are willing.
So Jay sir, wonderful suggestion from your side. We are having regular interaction, but if any subject matter which you want to highlight on that point of time, please let us know, because some preparation should be there. If you are suggesting something, some statics we need to prepare, and then definitely we can have more engagement with the stakeholders. On a regular basis, we are interacting with SEBI, RBI, all the banks, all the departments, because they are the principal stakeholder. And whenever they are trying to have any public outreach program, they are richest to us. So definitely we have a wonderful understanding in between all the regulators. If any subject matter from this study group, if you want to have a discussion, for that also we need to prepare some notes, and definitely we will do.
We will prepare an agenda properly. We'll come to you, pivotal, and we'll engage with. We have the.
So Rohit, whenever you are ready with the agenda, please let me know. Within a month, we will have a meeting with the regulator. That I can ensure.
Introduction of the rules, laws, and all that. I think we have to be part of it.
Yes.
Otherwise, when it is to be implemented, at that time only we are coming as a part of it. Actually, that is not a.
So recently we came out with a burning issue related to AIF. There is a CAT 3 AIF also, CAT 1, CAT 2, CAT 3. In CAT 3, there are a lot of difficulty in pass-through mechanism, which is not available. So we have prepared a wonderful note, and then we had an interaction with the SEBI representative, executive director from SEBI, were having the discussion regarding that, the CAT 3 mechanism and all. So similar way, if you can prepare any agenda, definitely we can reach out to the right person, right stakeholder anytime.
So
that would be great.
I may make a recommendation that helps. So when the circular got formed up, I was a part of the RBI committee who formed the ECL circular. As we speak today, IBA has created a committee, which is the Indian Banking Association.
Right.
We are part of the committee, but there's a core committee while you can have extended members. Personal view would be, since you have a seat of authority, you may want to create a closed committee here who would drive specific questions to the point Jay sir is mentioning, and then you can make sure that there is representation happening. The only two things that I would want to highlight here is the go live date for this particular circular is 1st April 2027, and it has got a fair amount of ramifications. There are quite a few pieces that RBI is not going to clarify because it doesn't fulfill or fall in the anvil of an accounting regulator, right? Well, they give provisioning. So I think those things has to be done in a time-bound manner. So you may perhaps want to do something in the next couple of months, have a note and have the interactions early on. Like I was discussing earlier, we are privy to who is driving it because we have been part of that. But we should do it as we speak now, rather than waiting for a group to come up in their quest over a period of time. That would be my personal thinking.
Raji, I like to suggest whatever you are suggesting me. Please give me on mail so we can have a proper documentation. And I will invite you personally also while going for the discussion.
No, I think that remains to be a different point. But my only point remains is let's do it on time. Yeah, because I think time is essence here.
What he's saying, no, arising today's meeting, some
note, we are already preparing a note,
more,
and we are working closely over it for many years. We'll engage.
Yeah, what I'm telling you, what are the bullet points in that where we need some more clarification, or from the statutory auditor's perspective, what are the things they have, all that, no, some सबको suggestion दिया तो वो Reserve Bank.
And in fact,
immediately we will react on
that. Our friends in RBI, NFRA, SEBI, they are aware we are having this meeting informally, they know. And we have already got some informal inputs.
Right.
In fact, they would be joining on the panel that we said we'll have a larger event in the auditorium or in Geo. But they are giving us inputs and they are aware of it.
So in the ecosystem, all are connected, sir. Definitely, we have to understand our role accordingly.
And for the newsletter, we are giving you a one-page note. It's already come to you, and it will come to you regularly. Sure. It is contributed
As of
by
now,
CFO.
I have not received.
No, it has come to you 3 days back. Yes, we'll send you again.
On that point, so we will take lead. I'll engage with you and we will see that we do it quickly.
So my simple suggestion would be whatever you are discussing now, it will be documented, then it will be fruitful to have a further action point. Otherwise, definitely there are a lot of discussion which is happening, but the action points are very less. To be
we don't want
and the newsletter, we'll send it once again immediately today only.
We don't want
For the newsletter, So we are looking, otherwise, no, they'll have to start, they'll stop preparing. So we'll send it to them again. Yeah, Vijendra ji and Shweta.
Yes.
Very good afternoon, one and all. First of all, we thankful to the chairman, the impactful WRC legacy of 75 years. From the 10 AM, we are with him. This is the 8th program. We are together joining along with the Shweta madam. So great applause to chairman, young dynamic chairman. Just I want to highlight you that you are doing wonderful job as study group in BFSI. My one suggestion, you all are banker from PSU, private, and all the members are there. Just think on to make the one implementation tool of the interest calculation. Like alarming, like business जो हम बैंक में लोन लेते हैं, लोन देते हैं, इंटरेस्ट कम होता है, ज्यादा होता है, तो कुछ आस्क करके जैसे समथिंग किसी ने एक बैकएंड में काम किया था, बट वो इम्प्लीमेंट बैंक में जैसे हम स्टॉक ऑडिट करते हैं, लाइक हम लोन लेते हैं, तो कुछ अलार्मिंग सिस्टम हो, कुछ सॉफ्टवेयर हो हमारा WRC के बिहाफ पे, बिकॉज यू आर ऑल आर द पार्ट ऑफ WRC. तो जस्ट यूज द AI टूल, involve the AI team, and just try to implement in this year one software on behalf of WRC. By all bankers are there with us, so they will also recommend us, so we can implement at large, so that the members can get the benefit while doing the concurrent audit, while doing the stock audit, while doing the inspection audit, while doing the bank audit. The submission from my side, and you are doing great job, and I am leading the hostel committee this time, chairman giving the responsibility, and you all are banker are there. So I urge you all for the CSR contribution. We have the Vasai hostel, Evershine hostel. It is a one hostel in WRC of IC. It is in DKC hostel in Vasai East, under the banner of the WRC. So this hostel is a capacity of 190 students. Presently 90 students are there. All structure, looking forward to your contribution. We will share the PPT with you. Whatever from on behalf of the bank, private bank, PSU bank, all floors are open for you. What you can contribute, because I think this is a generous contribution which you as a chartered accountant, you know what the chartered accountant expecting from us. So I think with the great contribution from you all, I'm looking forward to connect in this person, because like यहाँ पे Bank of India है, Bank of Baroda है, सारे banks है, IDFC, whatever. So I'm looking forward to your contribution as a CSR solar है, वहाँ पे काफी कुछ है. I think कोई भी बच्चा जैसे RVG hostel को सब जानते हैं आज, everyone knows. I think no one not aware कि RVG hostel. So why we not make our own hostel, the pride, the branding itself? With this, looking forward to your contribution as CSR. So thank you, Chairman, for giving the opportunity.
Good evening, everyone. Happy to see you all in a large number to attending this study group meeting. This study group is doing a great since so many years, and you all guys are leading and playing an active role. That's really fantastic. It will help us in our serve to the profession at large. So we all are there as a council member, but still we need a support from all of you. So whatever suggestions from your side, definitely suggestions are welcome as promised by the chairman. We will take it forward. जैसे भी हमारे लेवल पे हम ले सकते हैं, हो सकता है लिमिटेशन से, but take it forward and do it. So thank you so much, and be an active role, and always thank you.
Definitely, you can continue for this.
You only tell. Continue. You only tell. Now.
Yeah.
I just share
7 minutes. No, but I said after you then order. हाँ जुगलपति का start.
Sir, we have interaction, na?
Yeah.
So no people can not get.
Yeah, just carry on, please.
We were covering the main things which were not covered.
Yeah. So maybe. So we will do tango with Govind and I, huh? So you'll have to please bear the tango. So just coming back to the conversation where we were talking about what is the coverage of ECL. That was the point that where we left it before the conversation happened. So coverage is all financial assets, as we were talking about it, right? Now, financial asset effectively means those investments. But what interestingly starts happening now is we get off-balance sheet exposures coming in. Undrawn commitments, financial guarantees. And now, more importantly, when you look at the RBI circular, it has brought into saying performance guarantees also included in the anvil of it, which therefore means that if you had a loan of 100, drawn down amount, maybe I'll just wait for a minute.
So this is very important. Because I have few questions and because everybody is saying we are ready.
Honest answer, I mean, as we speak, we are doing at least about 12 plus implementations across larger organizations. I would be surprised if somebody says I'm half there.
Coming in a bit.
Half there.
Okay, so I totally agree. So because I was also involved in for some of the banks.
Okay, chair is not.
Chair should go.
Come.
Public sector banks. See, they don't have a data, and data can come only through a system. They don't have a data to go by. Either then they have to borrow from someone else, or RBI may have to give them. So that is, I think, it's going to be a major bottleneck. And that is why RBI.
अभी सिविल हो गए ना? सिविल में पूरा डेटा है. उसमें भी you can work out portfolio wise what is the default ratio.
I know, but finally, people would like to use their own data because if everybody is going to have a same percentage and all that, it doesn't make any sense. So
नहीं उसके ऊपर हमारा जजमेंट हम डाल सकते हैं.
That is what.
वो नेचुरली हमारा डेटा पहले भी हम करते हैं. देखिए सर.
Substantiated because otherwise auditor can't.
नहीं हम आपको एक ही बताते हैं. When corporation bank was in private for 5 years, we did the US gap. That time was a tall order. It was not required by the regulator. Then I was called to the Reserve Bank to make a presentation to the RBI Committee on Financials and along with the ICICI Bank. State Bank, they sent their people to our bank to understand how you are doing your balance sheet on US gap. So, ये data को structure data बना के data को भी हम देख सकते हैं और कृषि appoint कृषि to arrive at the data. They will bring them the industry data and my data, they will give us such a data. So everything will be that's a willingness to implement. If that is there, all other action will follow. That is willingness to be there.
Because coming from point, as he was mentioning, 0.5 to 5% is going to be very damaging.
Rightly said.
Very difficult.
Every year bank prepares or every quarter the NP statement. Correct. Filing with RBI SMA statement. Data is there. And 2016, data is with everybody except that when you launch a new product, you may not have the history. Then he's right, Mr. Narendra, that you have civil data or industry data to use.
Yeah, that's yes.
But that is becoming an excuse. Second, the most doesn't talk about PD, LGD, or EAD.
Right.
What happened? Reason was superimposed on the accounting standard. The entire IFRS 9, only one example is there, where PD, LGD, and EAD is mentioned.
Yes, sir.
Without understanding this modeling, everybody is applying this blind.
Exactly.
Compute PD, compute LGD, and EAD, you can very well manipulate. You can take next year midpoint and you can recovery. So EAD goes down and your provisioning goes down. So most misused thing is the ECL today.
So there is no standardization in fact. Every as per their own.
And within that, as Rajesh said, who understand Marco, who understand who understand distance to the point, who understand they say the population. So you can reach out, apply normal distribution. Who is able to
so many assumptions. Correct.
If you want to increase the provisioning, you apply by book. So there are a lot of plays you can do with the model, but without understanding what the model represents as a definition of
exactly
Python, what distribution you need to. True.
So it's not going to be easy.
And many
So-
people, what they are doing, they are accruing interest on this loans, impaired loan, and very cleverly reversing the next day, as if it's an accrual entry, without understanding what is the, you can say, rationale behind the accrual of the interest.
Correct.
And once you have fixed the ECL, you have to continue to remain with it till you have recovered the good part which you identified. So I think there are a lot of misconceptions in ECL. Then what happens to other assets? How do you apply? How do you apply the day one gains or losses? So Rajesh gave an example of a typical employee loan. Our major part is the leases, employee leases. The most misunderstood accounting is that nobody knows what are the terms of lease. Blindly applying its lease.
Yeah. See, RBI is trying to make it all common for everyone. Actually, that may not work.
Who is making it common?
RBI, the way
RBI, what is?
they give percentage and all that.
The hybrid.
Minimum their floor
An
there.
ISB body or through ECL and the super impose their own.
Correct.
in between
And then
what
say that they it
are
was
in the
forced.
efficiencies. Same thing happened with the investment circular. You look at it, you apply the way they have written, it will be very good.
But see, if we need, you use the word common, if we need uniformity for comparison with international financial institutions,
Yes.
I'm using the financial institutions, whether NBFCs or banks or fintechs. So there has to be standard and there has to be stakeholder consultation. It is not necessary. What Europe did is correct. They did in that context, they took over 10 years. NFRA chairman has done a presentation and they talked how long it took. US is evolving and they are driven by their own agenda and interest. So here, RBI has past experience in rule-based, circular-based. But now when this discussions are going on, ultimately we have the opportunity to put forward to them.
And it has to be same for NBFC. It can't be then different.
Absolutely.
So if I can
Because
just.
both are in the same field, right?
Yes, it has to be for all institutions, all financial institutions.
IFRS 9 encourages the portfolio growth because in
Right. Correct.
RBI suggests then individually you identify and compare the difference. And higher of two you take.
Now, whenever we go for equity call and equity meetings, as well as bond raising, they find difficult to analyze our balance sheet. So in all the equity houses or people, there will be one Indian. He does all this analysis because as he said, one is their year is between January to December. Second, they would have been following that IFRS very long, whereas we used to be indifferent. Now that is where to bring global uniformity and to reflect the true value of our balance sheet and in terms of profitability or in net worth or in terms of fairness and all that. This methodology, इसमें मेरा तरफ से इतना कोई तकलीफ बोलने का बात ही नहीं है. ये बैंक का ऐसी rightly said, ये है ना, Mr. Ravi Kumar, your Reserve Bank, he has been working on this for long, and he was in the central committee of your institute also. But ये इतना time लिया because as he rightly said, even though we were coming, they were little worried whether the bank's ability to resilient and bank's ability to give profitability back to the dividend, whether that will all get suffered. Suppose अभी additional provision आता है तो automatically our dividend will be reduced.
So I think maybe.
So उसके लिए delay हो गया. But what I mean is, मेरे तरफ से इसके implementation banks will definitely do properly and it will reflect better position.
I don't think there is a choice in the implementation and as far as dividend is concerned. Every income stream right now are very challenging. What they feel, if you are making money, you are making money at the cost of personnel. They are trying to put circulars around that or capping that. So once that is the objective, there is a question of then ECL.
Dividend make, I'm not telling, when I make more and more proactive provisioning, and maybe for future, sometimes I have sent ECL, we have done additional provisioning in NBFC and all. so that my what you call the net profit for dividend declaration will be lower. So then my percentage of dividend to the government will be coming down. So they are a little worried about that also, because आज के दिन में government को ये dividend coming from institutions and RBI, that big amount, all are becoming very important for maintaining the fiscal deficit. But वो एक global बोला, not.
If I may just maybe make a small clarification between NBFC and banks that has happened. Like you mentioned correctly, between say, let's assume Jayesh Bhai and I are two NBFCs, we like to believe that my portfolio is his portfolio, his provision therefore should be my provision, and that's how we have done it. And we have taken a provision. That thing has been addressed in the RBI circular. And I'll tell you the way RBI has addressed it. They have said that you could get an answer basis your model. You could also have your management judgment to do an overlay to the point that you're making, right? Which is what they call it as a PMA, post-model adjustment. If you're doing a post-model adjustment, then there is going to be adequate governance and disclosures that needs to be made in the financial statement. So therefore, I don't think RBI has been unreasonable, at least, and I don't represent RBI, I represent a member in the institute. So the only point I'm just trying to mention in here is there are adequate guardrails from the learnings of NBFCs. That's number one. Number two, as Mr. Kumar mentioned, there is an asymmetry that continues to remain between NBFC and bank as we speak today. However, I can tell you if there are any NBFCs in the room, there is already a dossier that RBI has sent to the NBFCs specific to ECL, just to make sure that there is some consistency. And I can also tell you, this is not a rule-based standard. This is a principle-based standard.
Principle-based, correct.
And when I get into the details of pieces around definitions, pieces around defaults and SICR, if you're familiar with the topic, significant increase in credit risk and default, I could have Gobin's bank being different than my bank because I would have criteria to be different. So hence, for a similar portfolios, outcome could be different, and we can get to those as different. But so I just wanted to address some of those points in here. One of the other biggest difference that has happened for an NBFC, which is an advantage you should go to banks like a PSU or a private banks or a foreign bank that's going now, is let's assume you had your old stock of provision as 100. Your new stock of provision, because you are moving from what you call a standard, substandard, doubtful bad, which is more incurred basis, right? DPD basis, days past due. You're moving from that basis to what you're now moving as a forward-looking expected credit loss. Obviously, expectation is 100 will not be 100, it will be 120, which is going to be on the date of transition. For NBFCs, the 20...
Or maybe 1-200.
Any number.
Discretionary.
So I'll take Sir's number, 200. So now let's assume the number is 200. NBFCs did not get what we call as a capital relief. Now, that this is a very important point which the Basel had deliberated, the BIS had deliberated, the Financial Stability Board had deliberated way back in 2014-15 when Europe transitioned to IFRS, which said that if your new stock of provision is 200 and the old stock of provision is 100, there is a delta. Where does the delta go? The delta goes to your opening net worth. Yes. Now, there are two parts to it. One is net worth adjustment ho gaya. Then for banks, you have a concept of capital adequacy, right? Capital divided by RWA. That's what you do, right? CET1, Tier 1, Tier 2, all of that pieces come in. There for NBFC, they did not get a relief. If you see the current circular, this is actually aligned to the BIS paper where they say you have an option of doing a 5-year transition. The BIS actually deliberated on the fact that there is a static transition and a dynamic transition. I'll not get into that because that in itself is a one-hour topic. But eventually the fact remains is you can do a transition on 1/5, 1/5, 1/5, 1/5, 1/5. Therefore, your onerosity about how much of capital adequacy would be required. Let's say, for example, today you are operating at a 20% capital adequacy. Threshold is say 13-14%, whatever is the current norm that remains to be there. You have a headroom of 7%. If your loss rate is significantly higher, you may come to the norm or below the norm. So therefore, you get a 5-year phasing associated. So there are a few places, there are relaxations that is coming in. The point that Gobin mentioned is extremely important. One is to understand the coverage. See, the challenge is now a blind leading a blind. I'm sorry, but I'm just going to be slightly brutal in the conversation so that when we go out, we can also be brutal to our clients.
We want to do that. That's objective in the study group. So differences come out before the wrong things happen. So we do the course correction before only.
So, okay,
Right?
the only thing,
On your spreading over a 5-year period.
Glide path. Glide path.
See, you can't have different, norms for banks and for finance.
Sir, sorry for interruption.
Just 1 minute. Let me complete and then I will hear. See, I have faced this earlier also. On gratuity, there was a 5 years given and some other things also. What I'm saying is, I agree that capital adequacy will be a problem. You give relaxation in capital adequacy. Don't give relaxation in PNL.
No. So that you are aware, Mr. Jayesh, I don't think they're giving a relaxation in PNL, but because you're opening.
Earlier, they're given in PNL.
So what they had given, they had not given the transition benefit, what they call as transition benefit. They had said that the implication would to be similar. However, now they've given a transition benefit for capital adequacy purposes only.
That's fine. Capital adequacy is fine.
However, the point that remains to be noted is NBFCs did not get this capital relief. That's the
Most of the banks will, the first instance only will make all provision because they have the capability. Usme out of so many banks, if there are 1 or 2 banks which are having difficulty, that one chance has been given. They may go back and say,
they had enough time to.
Sir, इसलिए because इतना बड़ा बैंक के लिए अभी सब ये मर्ज होने के बाद इनका कैपेबिलिटी भी ज्यादा है, प्रॉफिटेबिलिटी भी ज्यादा है. अभी हमारा इंडियन बैंक बताया, हमने पहले एस्टिमेट में आज कल ही बोला था 5,000 करोड़ हमारा रिक्वायरमेंट है. तो हम सोचे थे उसके लिए हम थोड़ा पब्लिक इश्यू और एक 5,000 का इश्यू करेंगे, सो दैट हमारा कैपिटल रहेंगे. और आज हम प्रोविजन देखने टाइम में 1,000 करोड़ हम ऑलरेडी किया है और 1,000 नेक्स्ट क्वार्टर में भी करेंगे. हमारा रिक्वायरमेंट इस अभी 3,000 आता है, तो हमको इसका कोई कैपिटल रेज करने का जरूरत ही नहीं. तो वो इंडियन बैंक अलॉन्ग विद इलाहाबाद बैंक मर्ज बैंक, अभी इधर है ना बड़ा बैंक है, अभी उनका पास और भी कैपेबिलिटी है. So उसमें ये provision ऐसा altogether I was told it was sometime 30,000 to 40,000 crores.
So that's only one part of it on PSU. Now today they are talking about PSU 40,000 crores, 40,000 crores private, at least 80,000 crores.
Yeah,
and that is also underestimate. That was a pre-war amount.
Oh yeah, correct.
So, sir, you are responding.
We
want the
inner story.
And then Mr. Parth, Vijay,
inner story.
Harish, we have many more.
1 minute.
Yes.
Kumar, Mr. Banerjee and Govind, I want to add one complexity. NBFCs, at least 43%, 43.5% funding is through banks. So when we are talking about capital adequacy or capital buffer, because that is what I read a few articles they saying, will it not be a capital erosion in terms of when we need more provisions, more the ECLs? Are we really prepared? So I'm just so wanted to
1 minute.
let
him answer. No.
Contextually, I want.
Yeah, I want Mr. Kumar to answer.
Yes. Two things. One, sir was when draft guidelines has come and the final guidelines has come, there was a lot of changes, sir. And the final guidelines, it has come with more reasonable things, whatever, no? One draft guidelines was come, there was a bit confusion whether this, whatever the first time adoption impact, whether that will be taken to the P&L of the particular, when you're migrating that particular year. So that was a lot of discussion happened when RBI CGM came for a clarification session with IB in their meeting. That time itself clarified very clearly that it will be going into the retained earnings only, to not take it to your P&L. And subsequently, when final guidelines also came, this has been to be told, it will be absorbed in the retained earnings only. And further point also, like staggering, like sir, I was telling that. Staggering is the one thing which was many point of time it was discussed when draft guidelines was there. And RBI also don't want to take into a regime of 12.5% after AQR exercise. So when you are going to do it directly, you take it to allow to do it a retained earnings and do it in one time itself.
Yes.
Means, so what will happen ultimately, any shortage of the funds, as far as public sector bank, it has to be made by only by the RBI only. Sorry, DFS only. So to avoid all this situation, what they have done was that this was the background also to given so that no banks also adequately capitalized as well as they are also migrating to the new regime. So this perspective only it was given, nothing else. So that's I wanted to
So that's fine. So if everything is going to be adjusted the reserves, and which is actually in line with Ind AS, because when NBFC also came out with that, it was adjusted in the. So in all fairness, any change has to be earlier years impact has to be through reserves.
So I think no, but more important point. Let me address it. Valuations of banks are not done on profit multiples. They are done on price book multiples. So if you are impacting the reserves, profit doesn't matter. Valuation is on 0.8 time books to 1.8 time books. So if you are doing on reserve, that's not a relief.
No,
it's not a relief because profit doesn't matter. It's on price to book multiples. Practical issue.
So Manoj, I mean, if I can just maybe answer that question as an investor.
I'm talking about as an investment banker perspective.
So as an investor, valuation will not be hidden. Let's be very clear. However, will the bank be scrambling for raising capital? The answer is no. So I think that is where the difference is.
Correct.
Market will already factor in because they will know.
It has already factored in.
They may not know the real implications, so as to speak. So market will factor. So to your point, hypothetically speaking, you are holding a bank A, and bank A has a serious network implication. Your valuation of the stock will automatically get repriced. I don't think there is any. However, will that also create what we call as something called as a contagion risk? What is contagion? Will this trigger additional capital requirement effective tomorrow? The answer is no.
It has triggered because many banks. Let me complete. Many banks think ahead of the curve, so they want growth capital. And they know this also, whether there's a 5-year glide path, so you need capital and you need growth capital also. And then they also go on market conditions. Best time to raise money in the bull market. If there is 18 months bear market, fund doesn't come in at a right valuation. So when they think ahead of the curve, SBI did not need money. I engaged with the chairman, Mr. Shetty, continuously, right from Rajnish to him. He did a 25,000 crore fundraising. They did not need money. But then he told me, it is better for me to get the overhang out. The valuation was lower, 1 to 1.2. Today it is much, much higher because that overhead or dilution goes. Today it has got enough growth capital for next 3 years. And now today also lending growth is, credit growth is 17 to 18%. Just imagine if that growth can continue with GCCs and coming in.
So you make
fundraising
discounted.
Fundraising you need ahead of the curve.
Market valuation. Market value. That is why. Otherwise, why it should be 0.7, 0.82 BB.
So one day your book value is this. Next day, your price to book changes. Now everybody is confused. What do I apply?
Yeah.
So that. That's in nothing.
5:30 बजे बंद करेंगे.
Suddenly deteriorates slightly, maybe temporary.
Yeah, then there is an issue.
Then there's an issue. The price of book changes.
For this subject, another half an hour discussion.
Mr. Narendra saying everybody, Mr. Parth, a few words from you.
We will.
Mr. Parth incidentally speaks to Mr. Parth incidentally speaks to IR people and CFOs and CEOs on a regular basis and tracks many banks closely. Parth, some thoughts from you, your own view, because you can complement it. I know you know more than many of the people who have spoken, and plus also questions. Both couple of minutes, introduce yourself, self-introduction, and then Vijay, and then Harish, and then there are many more.
Yeah. We used to say, हमारा पास data नहीं है, analyst का पास 10-15 साल का भी data है. हम आज क्या बात करते हैं, थोड़ा 5 साल के बाद भी हमको याद नहीं तो अब उसको याद रहेगा.
And Parth is the head of banking sector and in a company with managing over 2 lakh crores of funds. Yes.
Just so I work with 61 I cover banks. I've been covering banks for the last decade, since 2015. Yeah, sure. So I've been covering the banking sector since last decade. I've worked across Monetory, Access Capital, and now I'm with 361 Capital. So as an analyst, of course, we are talking as on the transition date, what will be the impact. But say on the transition day, going forward, 1Q28 or 2Q28, what will be the increase in the credit cost run rate is also one of the concerns that we guys have as an analyst, because as you rightly say, sir, we have the data, but we don't have the portfolio-wise data, right? Housing में X bank का क्या delinquency हुआ या personal loan में X bank का क्या delinquency हुआ, we do not have that data. We will have to rely on the banks for whatever numbers they give. So as you rightly pointed out, the LGD, PP, and the EMD will have to take it as it is. So how as a banking industry, is it are they well prepared, or how what is that number is what we see, because transition date पे तो हो जाएगा, every bank has called out 3,000 crore impact or 5,000 crore impact, and book value will also get adjusted. But what about the increase in the credit costs?
So I'll give you an anecdotal example if that helps. When Europe transitioned in 2015 to IFRS, there were quite, like as you were saying, there were a lot of research report that was being done to say that what is the real implications, right? Fast forward a year later, the pricing went up by 150 basis point, give or take. That could be a reference point one could have an anchoring bias on. However, let me also clarify, if Sirs Bank is underwriting well collateralized, minimum delinquencies, his provision is going to be far lower than what ought to be for, say, Gobin's Bank. So I just want to make that very, very clear. So here you will start seeing a fair amount of asymmetry in outcomes between Bank A, Bank B, Bank C. And by the way, I have not even got into the details. We just started talking about what is the scope. When I get into the details, and before I get into slightly more nuance, because one point Jayesh Bhai mentioned is extremely important. While we believe we have data, what data we have is also going to be relevant, and I'll come to that in a slightly different nuanced manner. Now, the question that remains is, sometimes we are half-learned, including myself, and I don't claim to be an expert. And the moment you talk about ECL, everybody's saying, "Arey, PD, LGD, AD." Bahut achhi baat hai, right? Because that's a fancy term, and that really impresses the other person. What portion and how does that apply? That remains to be a question. So there are three measurement approaches that is there. There is something called as a general measurement approach. There's something called as a POCI approach, purchase or originated credit impaired asset. And third is a simplified approach. Because I talked about the inventory of financial asset where your ECL applies. We started with that. We talked about loans, investments, undrawn facilities, financial guarantees, performance guarantees, trade receivable, Gobin said lease receivable. So that does not mean that every rule applies in the same manner. And therefore, these three measurement approaches become extremely important. The general measurement approach actually brings in this concept of, stage 1, stage 2, and stage 3, if you're familiar with the standard, right? Which means stage 1 means any loan that you originate today applies a 12-month loss. If there is something called as a significant increase in credit risk, or SICR or SICR or whatever English you may want to call it, that's when it applies something called as a lifetime loss. So therefore, if there is any loan which is more than 30 days past due, it could still trigger a lifetime loss, and which is still not an NPA. So there's a very, very different ramifications one needs to be really mindful of. And Govind, please chime in from your real life experience. The second measurement approach is what is called as a POCI approach, purchase or originated credit impaired asset, which means if you are in the business of buying loans from secondary market in deep discount, that is where the POCI gets triggered. And again, as an market analyst, as an investor, one would need to know what is my demography of loan portfolio that I've got. The moment I have got a POCI approach or POCI portfolio, that applies what we call as a lifetime loss. There is no concept of 12-month loss. In both cases, you apply a PD/LGD. However, there's something called as a PD term structure. We have to apply a lifetime PD term structure in POCI and lifetime PD term structure in stage 2 and stage 3. Very different application. Third piece that comes in is this piece around simplified approach. Do you apply a complicated mathematical model to, say, a trade receipt? The answer is no. So there is actually something called a simplified approach that one would need to apply for your trade receivable. The reason I'm just kind of emphasizing in here is I'm certain, and please, if you know it, just bear with me that I'm just calling out basic that one is expected to know. But unfortunately, what I'm realizing in interactions, whether it is auditors, whether it is CFOs, I'm sorry, but this is the fact on the ground. Whether it is CROs, they do not know the basics today. And which is exactly where we would need to perhaps
GST point के लिए,
Now the bigger question where the asymmetry, and I'll go back to Jeshbhai's point, will start coming in is, we talked about two terms which become very, very important. There is one term which RBI circular talks about called default or NPA. They don't use the word default, but they use the word NPA. What is the definition of default? And that becomes paramount because there is an illustrative example of what default definition. Some is mandatory, but others are illustrative. To give you an example, what the standard does say is if any facility is more than 90 days past due, then it is going to be considered as default. Now the question is that the only criteria? Maybe for pro forma, you would have taken that as the only criteria and moved on. But in reality, that is not the criteria. There are restructuring which RBI calls as default. There are also, by the way, in this new circular, there is a very interesting piece that they've said is if you have a cross default, that means if you have a stage 3 asset, which means sir has a personal loan and a credit card, you're not defaulted, you are a network good person, but at this
very high rating.
High rating. Huh?
Yes,
I'm taking that as an example
yes,
for a
that's a fact.
Personal loan and credit card, and he has defaulted in one of the facilities. There is a concept of cross default, which means every facility now moves in. This is a new addition that RBI brings in. Now, why am I bringing these conversations upfront? Which therefore means this definition has to be consistently applied not only for today, but also for every migration in the past. What do you mean by migration? Migration effectively means that if I'd originated a loan in 2020, in January, how has 2020 loan performed over the next 12 months? That is what is called migration. What would happen in reality? In the end of 2020, some loan would be repaid, some there would be delinquency, right? And some would have actually defaulted. That is what the migrations are effectively happening. So therefore, I need to apply the same definition of default in my historical cohort. Do we have the ability to do it? Today, RBI is mandated saying, "Aap NPA ka system laga do." I don't know if you've seen the circular now. You have to link everything together. And if you've seen the circular even more closely, which I'm certain you would have looked at it, they've also said that if you have an NPA or an NPI, now what is the difference between the two? NPI is non-performing investments, which means that if your investment in any bond or
instruments, financial instruments.
So any named obligor in NPI is defaulted. And if there is incidentally also a loan that is happening, you need to immediately move everything to default. Now the question is our ability to do this tagging. Did we do it in the past? Answer is no. Are we required to do it now? Absolutely yes. Do we have the wherewithal? We don't know. The ones who...
Sorry for interruption, sir. Where are you now? All these are already implemented. Yeah, you know, IRAC automation has been already implemented fully in banks. Everything has been implemented.
Whether investment, whether it is all are one single
system,
application.
now IRAC automation has been fully implemented in the banks. The circular which has been put in place, the circular has been already implemented in the bank. That is what has been brought it in the particular page on this IRAC automation. That is done in all the banks. All MD and CEO has given a certificate to the RBI. Then only they release this particular circular. So there is no need to anything in this point, because in this process I won't allude that many things as far as the IRAC or NPA, everything has been now. Any default now international anything a borrower default also now one person is having a link that also will get default. To that extent, system has been put in place, and the systems are directly monitored by RBI sitting in their own floors. To that extent, yes, sir, please.
So if I can just maybe add one thing in here, the draft circular which had a comment period open till November 2025. I don't know if you have read the circular because I was, as I said, close to what RBI was doing. This clause on cross default was not included. If you see the final circular, and it is English, the two circulars can be read very, very clearly. The final circular has actually brought in this thing because what has happened, and maybe you're right, sir, what has happened is there is still been an asymmetry of application between what was anticipated versus what is not anticipated. And I can tell you, I was in an IBA session not too long back. In the IBA session, there has been bankers who has asked this question, ki, does it mean कि यार मैं जब अपना cohorts बना रहा हूँ, personal loan and credit card, the example I took, technically in the personal loan, I didn't have a default, but in the credit card, I had a default. But when I did my personal loan cohort, then do I have to manually go back and do the default adjustment? That was a question that was sought. And the answer was very clear. Cross default on a historical basis has to be done. Unfortunately, what is in English versus what is in application has been different. Maybe, sir, there are banks who has been proactive to do the right things. There are enough and more cases where we are seeing banks who are not being proactive. That's the only limited point that I would want to draw. Now, let me come to another definition where we will start seeing asymmetries that's going to be there. The other place that we will have asymmetry is going to be with respect to what we call as SICR. Now, there are two places in the circular I would strongly recommend people to look. There is something called as an Appendix 1 or Annex 1 that has been put in the circular, which gives you indication of what SICR is, which means that if there is a rated portfolio, say 2-notch movement or a 3-notch movement, or there is a change in lifetime loss, or there is going to be change in certain credit spreads that is going to happen, or there's going to be certain standard deviation movement that is going to happen. So they have given a list of criteria that has happened. Now, what will happen in reality? And by the way, this was also a discussion paper comment, which a lot of us would have given to RBI, saying that while you're saying illustrative list, this is coming from DOR. The DOS will not consider this as illustrative, but will consider as exhaustive. What is the difference, illustrative versus exhaustive? The DOR will say, 15 criteria diya. Department of Supervision, SSM aake bolega, all 15 hi tumhara hona chahiye. So they have made a clarification to that effect to say that this is illustrative with certain additional wording that is coming in. Now, why am I calling this out? The reason I'm calling it out is we will not see a similar outcome between two banks because one of the criteria is EWS, which is watch list. Now today, my bank will decide that, okay, watch list is a parameter that is already factored in some form of rating.
Early warning signal.
Early warning signal. So that is already factored
Banks
in.
have implemented that.
The banks have implemented that, but it's in isolation, right?
Integrated to the core. It has to be. Nothing can be isolation. That is where they said that the NPA package, everything. It gives the global situation.
So you're absolutely right. So you're actually giving
So
the
पहले क्या होता था? बैंक का core अलग है, बैंक के NPA package अलग है, और ऐसे ही दूसरा early warning signal अलग है. ऐसा नहीं. Because early warning signal से the health of the account will be known. Health of the account से मेरा proactive provision start हो जाएगा. So
I want to tell RBI has deferred at this particular time for a long time only because of entire banking overall, whether it is a private sector bank, public sector bank, or otherwise a small finance, whoever wanted to implement this guideline, they put this system. After they got a certificate from the respective MDs, they have a system in place, this is a robust system, then they brought in black and white. Otherwise, they will not give 1427, now only do. This particular guidelines is Annexure 3, which is talking about automation of asset classification. This particular certificate, entire MD and CEO, all banks are given to RBI. So this need not to be for now implemented. And this particular process, okay, early warning signal, yes, I agree with you. Yes, please.
Now this I'll share my thoughts on what you said on this readiness. Now, practical issues. I talked to various MDs and chairmen of banks, private, public. State Bank number 1, most transparent. So we are ready, and so much amount is would be required, and so much we have already built buffers and etc. Then I asked the MD of a small bank, but incidentally 80% PSU bank, and offline I'll share the name, 85% owned by government. So he said when the circular came to be ready, and 5 years glide path was not mentioned at that time. So he says, I would need money. I'll ask the government. President of India is the owner of my bank. I'll ask him to fund it. Then he told me the amount also. This is a small bank, small, tier 3. And this, then when I spoke to Anderson Bank, Mr. Sopti onwards, He says, I'm building in contingency, 1,000 crores, 1,500 crores, ready. IGFC is the most transparent. It's all in public domain. How we are building contingency buffers. In fact, they are ready for 1 year. It is only because of the smaller banks. They need capital and they needed some initial protection. So when now small banks are ready because all of the banks, because of that PSB, they,
what I'm telling you,
PCA, they survived and thrived.
2020, when the COVID came, Shaktikan Das called all the banks that you don't buy the regulatory capital, na, uska bare mein aap, you have to be much above and you have to build a buffer capital.
Exactly, and you have to be a strong bank.
And all the banks, because the market was also ripe, they raised, particularly private sector bank and all, they raised a lot of capital. So the industry at the overall level, even now, it is 18%, now around 16.8. So the capital buffer is already built up.
Yes.
So आपका ये point है ना, okay, उसमें outliner वही हमारा ये financial stability also I am telling you, a few banks are outliner.
Yes.
When the real above base scenario, adverse scenario happens, including ECL or other things, some of them are not able to withstand.
Yes.
So they have to take that message right now and they have to again build up the capital. As you said, gone are the days when everything banks used to go to our Reserve Bank, Government of India and asking for capital. Even ECL and all, I don't think bank will go. Bank has to go to the capital market and raise.
Yeah, government is clear. They will not
go now.
No, we'll come on. We'll come on the NBFC.
I will add one more.
Yeah.
On the illustrative list, there is some bank does not consider EWS. Why, as an auditor, will not ask a question whether it's illustrative or not? You rebut this presumption that EWS is there, and why not it's IC?
No, Govind, actually.
Just because you have adopted a stand, I don't agree with it.
See, Govind, what is happening is that this.
Let's say.
No, I will tell you.
Loan default is there. And rating is D.
I am on the other side of yours. I am aware of
Loss. And why should I wait for 90 days?
नहीं wait करने का नहीं वही है
नहीं आप बोल रहे हो नहीं करना मेरा पॉलिसी तो 90 days है
नहीं वो 90 days निकल गए सर अभी 90 days has been kept for no I am telling you earlier also 90 days is the for event date but अभी event date का नहीं है
don't ever a strong team. No, they have a battery. See, battery of people from the other side will kill.
No, so in fact, just to add to.
Any other question?
I have to give an example.
Sir.
The people who come for audit, they are from the risk background. I ask them simple question. Have you read accounting standard? Do you know accounting? No. Then what will you check? I will check the model. Then what will you check? What is the outcome? So you have to understand the framework.
Exactly.
Any questions?
Where is the?
No, I think Govind makes a very important point, which may be relevant for all of us here also. This illustrative list of what an organization chooses versus what others will come and challenge is a very important consideration. And if you see the circular here, RBI puts special emphasis on the fact that CFO and CRO has to constitute a committee. That's number one. This has to be approved by the board of whatever choices you do. And at least from personal experiences for where we are doing work, we are at least seeing auditors engaged now and not after every part of the policy decision is happening. So that, and this could be very relevant, sir, that in a particular X portfolio where I believe my delinquencies or my stickiness of the portfolio is bad, I would rather have more criteria come in. So one thing that we may want to do, as if we are auditors in this room.
See, Mr. Banerjee, there are few auditors who will be definitely doing, but that number is very limited.
But which is where the institute can perhaps.
And what is happening is that with joint audit and all other things, other auditors comes into picture, and then they defend on the other side. See, I think that is a practical situation just now people are facing. Auditors need to have their own team to assess, which is not the case.
No, that's an important point he's making on the limitations.
I agree. I can't approve. Tomorrow, if another factor is relevant, I will say include that. Why should I approve?
Correct?
No auditor will agree, और वो बोलेगा ठीक है पास में जो कर गया गलत करके गया अभी नहीं करना है.
Now I'll come on this. We are going open to everybody.
Outside MPA नहीं
Let me- हाँ.
No, they have started the year, so right? Nobody is considering the implication of that. Your team will disappear. It will take more time. So I think.
OPEX will also go down.
How much? How much?
No, but see the
OPEX is very strict. It's a direct OPEX.
So the question.
But you will have a very tough time to prove.
If someone is doing what DSS, someone like IDFC mentioned on the call also, that for them OPEX is high because
I will-
they do what DSS.
by 6:30, 5:30 I will go.
5:30 will.
I know that's what I'm trying to.
Because that's why so after कुछ करने का तो है नहीं 5:30 will go. Yeah. They can discuss.
Acha, we have limited time, so we'll have short from all and on core implemented issues.
First, any
One second,
questions I
one second. No, one minute. Vijay, just no, enough.
Let it be a question now. What is the
No,
question?
okay, finish your question. No, finish your question.
I have a question for Mr. Narendra.
Please, sir, please.
All these requirements we have been talking for last 2 hours. Do you think there will be, banks will not be pressurized by government? You talked about dividend, declaration of dividend. To enable bank to declare dividend, higher dividend, because public sector bank government wants higher declaration of dividend. So will not bank be forced to compromise on this requirement?
नहीं सर वो नहीं वो उसमें नहीं आपका we are नहीं I am telling you we are आपका answer sir आपका वो we are always guided by our Reserve Bank of India. A Reserve Bank guidelines will follow strictly. Arising out of the Reserve Bank dividend policy, and if we have the surplus, some banks sometimes follow a little medium term and long term. Accordingly, the rate of dividend can vary. So, but still we have the surplus because in the last 5 years, banks had a good surplus. So they pass on to the dividend to the government. Government can ask sometimes, okay, abhi aap thoda interim dividend de do.
But your accounting policy will determine the profits.
No, but that's why one ये आप है ना gone sir और है ना ये
will force you to do something wrong.
sir ये government
It's not question of doing wrong.
sir
Wrong means, what is saying is higher profit and higher dividend.
चलो अभी आप छोड़िए sir. What I'm telling
I
you,
think
Reserve Bank also had a discussion with the government, and after when they saw there is a current scenario is much the better period, and as he said, they have gone to individual bank preparedness, then certification, all that करने के बाद, they have given this circular from 1st April 2027, and it is also supposed by that time this global scenario also will get stabilized. And a few big banks, they will make maybe at the first stretch. Few banks will make it in 5 years, and even that is okay. But as you rightly said, if one bank after providing according to that and they find there is no scope for dividend, they may not give. There is no problem. But the big bank which have enough money, they will give more. What is that?
Acha, next.
Next.
He's ex-UTI mutual fund. Vijay, from NBFC perspective, your thoughts or any question?
So my thoughts are that comparison between the two, like when we transited Wind days for NBFC, comparison between the two NBFCs was very difficult because everybody was implementing their own LGD. So this comparison again will be difficult for banks also when we are going. Of course, there are floors are being introduced by RBI, so that minimum floor is there. So as he rightly said, there is a mix on a regulatory requirement based on the floors and whatever is the history of the particular bank. And secondly, the industry is having very few experts in this area. So auditing, when auditors are coming, they are relying on someone else. They are relying on risk team or something, because in practically I have seen they are just relying on someone giving them comfort. Even they are not able to go and audit. So we should develop that in our members also, that capability that we can go and assess and analyze based on our own assessment. We are depending on some external valuer or some external consultant who is giving comfort. here is a chance where management can play. So that is
Auditors,
area.
I'll tell you, auditors will look at whether it is at an acceptable level or not.
That is minimum.
Right? Because otherwise, auditors challenging management is going to be difficult.
Yeah.
But at the same time, if it is not at acceptable level, it should be.
But one thing is my economic assumption, but as he said, even various other parameters have to be consistent. And it has to be approved by the board. You can't, each depending on performance, I want to change, no. Whenever change is coming, it has to be a proper disclosure. All disclosure will have to be given, justification will have to be given, and somebody reading our balance sheet should be able to understand clearly through those such of disclosure. So second, as far as possible, a technology also, if you use it, that model has to be vetted. We normally vet that maybe CRISIL or ICRA or CARE, so that model again on a consistent basis to the shareholder, stakeholders or the regulator, so that then they will think. Otherwise, model bias, if it is there, that will also affect futuristic. So your point is correct. Each bank with their wisdom and with the knowledge of the circular, and with that they will prepare and accordingly. As you said, sometimes regulator, when they are coming to understand, they are today regulators, all this information are already there with them. They have a now system on day to day they take. So with that they come only if there is a inconsistency or some of the things they will get clarified.
Mr. Netravalkar, next, some thoughts from you. Bank of Baroda. Self-introduce yourself and you can add thoughts, you can even ask questions, whatever you want.
I've been listening to this interesting conversation. I'm from Bangalore. Look after the accounts there, and Ind AS, performa Ind AS is churned out of my desk again. ECL implementation.
Little loudly, more. Yeah.
ECL implementation was also done. When the draft guidelines came in, we looked at it. We had a lot of questions in our mind. We put across about 8 to 10 page letter to RBI on the draft circular, seeking clarifications, giving all recommendations and all those things. And I'm happy at least 70 to 80% of those recommendations find a place in the final circular, which has been given. There are certain other nuances where we sought clarification. So something like, and that is probably my question to the forum, because we have experts with risk background as well as from accounting background. On the overall governance framework, now there are concepts coming in like frontline operations, second line of defense, internal auditors, third line, which is already there internationally. But now, as a part of this ECL guidelines and as a part of the model risk management framework has come.
Governance framework.
Yeah, model risk governance framework has come in place, which is a draft stage. Now, the confusion that is happening across banking and especially PSU-wise to some extent. Second line of defense is risk, which is supposed to oversee and validate the models and all this and oversee validation. Now, computation, model building, and all are to be done by frontline operations. Frontline operations would mean, in my thoughts, someone who is not a controller. So, not a controller function. So, second line of defense is risk. Finance is a controller function. Now, the only thing, guys, which remain are operations and business. So what is, in terms of the overall background behind defining frontline operations is what I wanted to understand.
Maybe if I can take a step back and define the genesis of where this is coming. So this genesis, interestingly, so we have been in NPI, NBFC also. So we are doing the RBI outreach. And RBI has been asking question on model validation. Good news, there is no validation guidelines that is available. Until very recently.
Yes.
However, RBI is going to ask question. So let's go back to what was the guideline that actually provoked the 3 LOD as a concept. So there was a paper called Basel Paper 14, BCBS Paper 14, which talked about models and model validation. It was more online with respect to credit risk models that was there. That then led to other papers that came in. So there was the Fed paper that was issued, which is the Federal Reserve, called SR 11.7. Fast forward, there has been few other papers that has been issued, where we took inspiration from, as when RBI came up with this thing, called a paper called SS 123. SS 123 is a paper that has been issued by the PRA, Prudential Regulatory Authorities of the UK. And by the way, the SR 11.7 now has got modified by SR 26.2 by the US, right? Now, what it effectively says, and the reason I'm just giving slightly a prolonged answer to rather than a short answer to this question is because what it is trying to do is segregate duties between a model developer, a model owner, a model validator, and a third line of defense, which is internal auditors. So therefore, what is the structure that we are seeing globally for all the GSIBs, which is globally systemically important banks? The GSIBs typically have either a risk analytics division or their businesses saying that what should be my risk-based pricing, what should be my RAROC, what should be my ROC, what should be my propensity model, what should be my collection analytics model. Those are either sitting in the risk analytics unit, which is different from your LOD2, which is a CRO function. And sir, you may want to add in, Kumar sir, or it could be embedded as a part of business, which is exactly what RBI is saying, that you should not have a self-review threat, that who is developing the model should not end up doing validation of the model. Therefore, that now has put an onus. There are two papers, by the way, that has been issued. As a part of the ECL circular, you also got the MRM circular pursuant to only credit risk. There has also been a new paper that has been issued very recently on model validation, which also brings in not just credit, but it's also bringing AI, ML, market risk, non-financial risk models that is coming in. So slightly more comprehensive that comes in. There they're saying you need to have what they call as an MRM unit, model risk management unit. So therefore you should need to have a model risk management head, and there should be people who will be able to do validation. Now again, in validation, there are two kinds of validation. I'm sorry, I'm giving a long answer, but it's important for us to know. There is something called as a full validation to say that today I built a model. I say that these are dominant factors to a model. And that factor, say GDP interest rate for a macroeconomic model, is a relevant model. Now, to the point sir was mentioning is, do I change my model every year? Or do I just change my coefficients of a model? So in a model, when you build, say, a regression model, y is equal to mx plus c. A dependent variable and independent variable moves in a certain coefficient, 92, 97, 95. I mean, if you go back to basic mathematics, we're not talking about anything more. Now, the question that remains is, do I do a full validation, which is at a parameter level, or do I do a validation at a model level? Those are pieces will not be done by LOD1. So to your answer, Balchandra, we will effectively have to have a separate unit, which I know BOB has it. So if I look at Mr. Negi's team, there is a separate MRM team that is now being constituted when I spoke to him as well. And that is what we'll end up doing. Now there is something in addition called a continuous monitoring mechanism as well. That will need to come in. So long answer, but there are more to it. We can talk about that.
So rolling up to CRO.
The MRM function will roll up to the CRO, not the risk analytics.
Acha, next we'll have Harish, then we'll have Salvin. Prakash bhai, also get ready. Harish, foreign banker, rich experience in ICBC and now with Qatar International Bank.
Finance.
Acha, one second. First Harish is there, and then Prakash bhai, get ready. Salvin, Naveen bhai is also there, no? Yeah, Naveen, get ready. Yeah, Harish, some thoughts.
Having question, let them ask. If they want to speak, let them tell.
No, they are there. We have planned before actually. They have been waiting for a long time.
Please. आप बताइए इधर सर ही इन्होंने पहले बताया था.
Yes.
So much. I think this is a wonderful discussion. So my question is not on the ECL side because I'm not the risk guy or accounting guy. I'm from the front end business side. So I am from the treasury side. So Mr. Narendraji, you have covered comprehensively the risk, which is right now we are going through geopolitical and the India specifics also. So, so there are two things which has come to my mind here is when we talk about exports has been hit hard, okay, because of uncertainty also, and also because our Middle Eastern exports has been hit hard. Okay.
Short answer.
So from where, and again, there is a challenges because money is being pulling out of India. That is why the FCNR things have come up to bridge a gap which has been created. Growth has been lower. Now, my question is where you see the growth is coming from. Now, India, when we're looking at, we're seeing the fastest growing economy, though the growth has come up. But what would be the next growth driver under this uncertain, challenging situation where the everyday is evolving? Crude is being the energy cost is being big hamper. So FCNR deposit, which is there, reduce the cost of funds for the bank and also bring a lot of money, which is almost like 8 lakh, 9 lakh crore, which is coming to the banking system. But energy cost is higher, El Nino, and then this, if we push growth, then also push inflation.
Yes, exports we are still maintaining small growth. What the India has done, no, they have diversified the export. USA में तकलीफ है तो दूसरा country में. Second, अभी Europe related or England related, Australia related, New Zealand related, Gulf related, free trade agreements have been done. So we can't expect only our export. We have to allow them to here. So with the result, medium term our growth prospects from the export that has been maintained. Second, government has given credit guarantee so that the exporters, MSME and all, they will not suffer on account of not getting available credit lines. Second, the realization time, they have extended up to 300 plus days. So with the result, certain relief has been given so that they will continue to, but at the same time, they have to be productive. Second, their products have to be superior value. They have to make little cost efficiency. Then one more thing is they have to be what you call climate emission control resilient. It means they have to stop. Fourth, they have to not use the child labor. अभी है ना हमारा World Trade Center में इधर World Trade organization में USA has taken up, and USA also has a law that they will put some restriction on our export because we have not given the certificate or we have not done act to say that they must not use child labor. So ये सब on the export front. So only what we are doing, export continue to grow. At the same time, unnecessary items of imports, total curb. And around shifted to Atmanirbhar Bharat. Abhi toys, we are not importing now. We are encouraging our own. So,
PLI scheme has come.
So India, other than the PLI scheme, of course, that is again, there the incentive is only on sales, not on investment. So that is another thing. And India made brands, small in the rural area. And that is why then aspiration district. From there, no such products are going. Khadi Village Industry Commission, these people are working. So in the result, our part of the export growth for India, that has to maintain. Second, on the service exports, now they are also cannot be comfort zone. They have to little, see that they are also in a way, keep with the aspiration of the current requirement of export. That is the one. Then India may agriculture is little volatile. So how do you use such seeds which are climate resilient and or use certain seeds which gives a higher productivity? So if the agriculture grows around 4%, your manufacturing grows around 11-12%, then other territory sectors also grow, service. Then getting a growth, what we expect, will not be difficult. So to that extent, the growth drivers have been.
Naveen, Salvin, portfolio manager perspective, Salvin is Birla Sun Life fund manager, and he's also helping Rohit as a joint convener for the study group. Yeah, Salvin, some thoughts from you on the subject.
I have certain questions.
Yeah, certainly. Any number of questions. And then Naveen, Prakash bhai, get ready. Very short answers. So before people go out.
आपने इधर इतना है ना बहुत ज्यादा डिस्कस किया.
नहीं sir. They were very angry.
टाइम नहीं है. हाँ बताइए sir.
Questions from my end. First, if you look at the more macro questions, so if you look at the banking as an industry for the last few years, right, last 5, 6 years, two things. One, we have seen the asset quality to be very, very pristine, right, after the AQR.
Quality has improved, you mean? Health has improved.
Health improved significantly. And if you look at the credit costs and also the GNPA ratio, they look at almost at the bottom. But if you look at the growth over the last 3, 4 years, the flavor of growth changed quite significantly. Unlike last decade, where we saw corporate growth, this time the growth is led by different segments. So when you blend both these data points, where do you see the risks? And also on.
Yeah, I'm telling you.
Please share the photos with Rohit and me.
One question. Corporate sector, they will look at bond market vis-a-vis the bank credit. If the bond market is giving them at a favorable rate, they will borrow from the bond market. There again, banks are investors along with others. But if the currently bond market say they find better in bank credit, now the shift is taking place. There were days corporate credit used to be 60-65%. Now it may be 30-35%. The balance has been taken from the RAM. What you call your retail or mortgage or then MSME, agriculture, all that have taken. So it is in direct proportion to growth. If the growth is lower and is expected to be lower, banks also will be cautious in lending. And they are not aggressive lending because they have seen a bad days already. They don't wish to have such bad days now. Second, even infrastructure or project loan, it takes time for real availment. Sanction to ho gaya. Availment ke liye time lagega. So it is a question of time. Aaj a lot of money goes to investment. When the real credit growth, investments get reduced and that money comes to bank. So this our treasury management is to make available always required funds for productive goals. RBI ka rule bhi wahi hai. Where productive credit ke liye kabhi bhi busy season ho, kabhi ho, they will give the that much repo karke funds available karega, credit growth ho jayega. Yahi point.
Quality of assets.
Quality assets में वही हम suppose अभी disposable income or the net saving of the individual are not likely to go up because of the growth overall reduction, then the banks have to make little proactive provisioning towards retail credit.
When systemic growth gets iterated, automatically credit quality also will get growth. It is totally rated to the systemic level. So far, systemic is going functioning fine. I don't think you don't find any risk because it is spread across. The RAM is spread across entire society. Yes, the next question.
And with the current that model, risk is not based on concentration risk. एक बड़ा party में नहीं है. आज का दिन में it is wide distributed. So it becomes easier to absorb such loss.
Second one.
You are asking 3 questions for him.
2 questions.
Fund manager.
बताइए.
Industry has been struggling for raising deposits, right? That has been a challenge for last 2.5 years now.
Industry.
Banking.
For deposit, I will answer.
हाँ, वो बताएं. रिसोर्स के बारे में बताएं.
So basically,
पहले बोला था ना आपको. हाँ.
2 साल पहले the deposit rates of public versus private, if we see, then public used to be little higher. But now, as we see,
एक ही reason है. During COVID है ना. During COVID, these interest rates were reduced without reference to inflation, and that was reduced best to give the revival economy. RBI ने 12 लाख करोड़ सिस्टम में लगाया. तो इंटरेस्ट रेट को इक्विडिटी से नीचे किया. वो टाइम में all deposit including you and all, you are getting negative carry, negative interest, because your interest rate what they were offering maybe 4%, 5%, whereas the real inflation was 6.5. So that time suddenly 12 I think crore demat account ho gaya, and everybody started moving to equity market through the mutual fund. Mutual fund ko per week monthly 30,000 35,000 itna paisa aaya. So wo money ideally would have come to the bank, but it has gone there. So with the result, but suddenly they felt the अभी आपको last year भी इतना return नहीं आया equity में, अभी भी negative return है. So now again it started coming back to system because it is the same money whichever, but over and above individual debt level has gone up. His ability to save also has come down. We at the common man, आपसे हमारा जैसा थोड़ा mid level or higher income level, you have enough money and you are looking for good investment. But their level, no, they are, because if the agriculture gets affected or the government flow is becoming less, then naturally their income level is low. So that is how, but banks have still not gone into any difficulty. But the average credit deposit ratio of some banks are more than 85%.
90 also. Large banks.
Oh, but their RBI has been giving enough money. Market mein funds are available, and whenever required, they were funding also. So with the result, the credit growth per se has not got any
deterioration
or any restriction also. पहले है ना suppose कभी-कभी even
because of restriction in the deposit growth, there is restriction in credit growth that is not happening.
Earlier कभी government level से or RBI level से when the market is very
indication comes,
then they bring restriction by increasing the capital charge on the earlier housing में 125% किया.
Personal loan
और personal loan में 150% भी कर सकते हैं. So that is when they see exorbitant growth, which has to be curbed. But whenever they see moderate credit growth, then such restrictions don't come.
Naveen, some thoughts from you? Any questions? Sure, Prakash. Let him finish. Yeah.
What is it? Bank FD creator?
Good practical question.
Hey, what do you ask?
Let him ask again.
Only churning. Only one word.
Growth prospects, growth opportunities, rise of India. Prakash bhai. Acha, Prakash bhai, I'll just mention ICICI Bank, Aditya Birla, Woori Bank, and I'm now a CFO and a part of our core team. Prakash bhai, yes. Prakash Bhatia.
I'm asking a very simple question. I think it will unsettle all the settled people.
आ जाओ ना इधर बैठो यार कुर्सी लेके आओ.
My simple question is that there is a lot of talk going on since last 1 month. So, how many think our ex-RBI governor will handle the finance portfolio?
Madam and the PMO will decide.
This is a
But Manmohan Singh had managed well, no? He was a prime minister also. He was RBI governor. So but ये सब news है. इसके लिए अभी that is the
no. So I'm saying
beyond the jurisdiction.
Yes, we are in institute. We cannot come.
आगे बोलो. इसी बोलो.
हाँ sir.
Now 6 days PM was not there. Now he's coming back. Lot of things are there. Cabinet reshuffle.
After even if it is there any, even if anything that has come that after the parliament session only, अभी पहले नहीं है. नहीं sir, वो आया है because they want to give all the bills and all pass होने के बाद ही करने वाला. अभी नहीं कुछ करने वाला.
Yes. So will he be the good replacement? What do you feel?
It is.
He's already working in PM.
It is the wisdom of the prime minister.
Finally, PMO will decide.
Yeah, we have a banker, Kotak Bank. Yeah.
One question.
Yeah.
Yes. Sir, also mention your name if you can and your bank. That's all. Yeah.
So the concept of risk is we discussed. So in that we have a concept of de-dollarization.
Yes.
That is the concept is going to upcome. It is upcoming. So what is the risk we can think of? Because now the dollar is the only one we can.
Yeah, apne वही sir. That is there have been a lot of attempts to reduce the share of dollar to the global trade or global currency. तो पहले 80-85% है तो अभी 65% ही है. थोड़ा कम हो गए. So one side euro was the major currency.
Yen also now.
Yen also major currency. Second, quite a lot of.
It has taken 20 years. From 85 to 65.
60, yeah.
Sir, wait a minute. Then there was one idea to bring in BRICS related currency. That Mr. Trump is so angry. Then he started all that. But even our Chinese currency, that is also reasonably becoming a good currency. Then India also tried with this central bank digital currency. So wherever we go, we have an agreement with that country that your currency will accept, our currency you accept through the central bank digital currency. So central bank digital currency has been introduced for global cross-border transaction. तो आपका तरफ से वही है. इवन रिजर्व बैंक पहले पूरा अमाउंट यूएस में ट्रेजरी में रखते थे. अभी ज्यादा मोस्ट ऑफ सेंट्रल बैंक हैव गॉन फॉर गोल्ड परचेस. गोल्ड में ज्यादा रखते हैं, दूसरा करेंसी में भी रखते हैं, थोड़ा उधर रखते हैं. तो ये de-dollarization has been a priority and every central bank is managing.
But my second question is, if there are foreign banks, those, for example, yen is there, then the foreign bank which is come from that country will get beneficial other than what domestic banks are there. Because
will they be the
beneficiary? For example, he has more benefit or from the trade or finance. So they have their own currency and they are coming to this area in the India. Then what will be our risk with their bank?
I already given my card.
He is asking, the foreign bank, here in India, they are limited player.
Correct.
They don't have that much risk appetite, and here in India, they are fully controlled by their global whatever. So either they are very marginal in terms of all these and our forex trade, all that, no. Only some high net worth transaction.
Starting stage, it will take some more time to get evolved.
Yeah.
This state agreement now will take some more time to get.
Yeah. So इसलिए उनका beneficiary हम negative है ऐसा नहीं होगा, कुछ भी नहीं होगा. They are only marginal player and they have marginal risk management में only. They don't take high risk.
High risk control.
Yes.
All foreign banks are into the niche segment of their country specific.
उनका उधर से आ जाना देखिए over there. Deutsche Bank has sold the retail to you. So Barclays has sold, Citibank has sold.
Attractive price.
कोई foreign bank का कोई consistency नहीं है. आज इधर है कल नहीं है. चलो सर उधर.
Sir, you have one question.
Ability based.
Sir, mention the name and your bank.
सर उधर आए सर. हाँ बताइए सर, आप बताइए. 1 minute है, you wait. हाँ.
So this is not to do with banking. This is more to do, economic and general. So 20 years back, 30 years back, we would see that the village economy would be dominated by some mahajans or some, lenders and who would lend at 20, 25, 30%. And, there would be a lot of distress, How has that changed in last 2-3 decades? Have these NBFCs, have these small financial institutions, has this, this technology, has it changed?
What we'll do, we'll hear 2-3 people, then answer all together. Next. Because we have to pressure on both the sides.
He is hearing.
Yeah, loudly little.
You hear.
You can sit down. Panel means everybody is equal.
My question was that this deposit stress also, sir mentioned, you mentioned that the CASA stress and deposit stress is going for like 2-3 years now. And latest with the Middle East uncertainty and RBI also keeping at a neutral stance.
FCNR
In Indian economy and in the reality, what is the conception that in future these deposits will become stable or this stress will again persistent in next 3 to 5 years also, because banking is based on acceptance of deposits. So majorly if that problem still persists in another 2 to 3 years and the current economy is uncertain, what is the outlook of RBI?
Okay, you got your question. You got your question.
Yeah, one more.
Anybody else?
Yeah, he's waiting for a long time.
So the first question, 2 questions.
Sir, name and bank.
I'm Asir Rajiv Javri. I deal with almost all the banks in various assignments. Since last 22.
No, fine. Your question.
So
answer the next year.
What are the top 3 to 5 priorities of RBI for strengthening the banking system in next 3 to 5 years? Secondly, for AI, how is RBI using AI and data analytics for supervising the banks?
Yeah, अभी इधर तक एक मेरा उसके बाद में इनको that's a rural area में consumption has to go up, for which our government का all direct benefit transfer funds are going there. प्लस स्टेट गवर्नमेंट का भी अलग अलग स्कीम उधर जाता है. With the result, if they are agriculture is doing very well, then disposable income, then their provision for luxuries and all will go up. So with the result, our urban consumption say rural consumption, we all companies are focusing. So the growth rate of the, that is why if the agriculture going at 3.5-4%, then economy. So over a period of time, rural roads, rural other infrastructure, social projects, all that government has focused. With the result, rural economy plus their aspirational districts are also mostly rural area. They have started growing. Second, आपका sir, बाद में he will add. He will add. आपका है ना. One thing is certain. Out of all your saving, bank deposits are most safe, secure, and whenever you want, you can withdraw. That possibility is not there in all other capital instruments. So with the result, nobody will have all the money invested only in bond, risk bond, another thing. Bond में भी बहुत सारा उनको समझे भी नहीं होता है, इसलिए बॉन्ड में कभी डिफॉल्ट हो गया, लाइक अभी यस बैंक का डिफॉल्ट हो गया और कोई दूसरा वो क्या है, वो हाउसिंग फाइनेंस कंपनी है ना, वो वधुआ, उसका कितना बॉन्ड में डिफॉल्ट हो गया, एंड दे हैव लॉस्ट एवरीथिंग. सो दैट इज वेयर बैंक्स विल बिकम द सोर्स ऑफ डिपॉजिट्स. एंड बट मेहनत करना पड़ेगा. बैंक से ना ऐसा बैठ के डिपॉजिट आएगा नहीं. यू हैव टू गो टू द मार्केट एंड यू हैव टू वर्क. ऐसा किया तो डेफिनेटली बैंक का ग्रोथ तो रहेगा.
Mutual fund is becoming a major.
सर वो कल भी म्यूचुअल फंड किधर रखता है, वो फंड्स आता है बैंकिंग सिस्टम के.
For 5 years, competition is there.
Yeah.
No. On bond market, where is the problem?
With the negative.
On a liquid bond market, where is the problem? They are giving 5 to 6%.
PF is the best rate.
Oh, that's why national saving scheme में आज का दिन में भी funds जाता है, because it is a little higher return.
8%.
And banks, government also using national saving scheme. ऐसे whenever they need, they take the money. आपका money है, उन्होंने draw करते हैं. तो आपका इसका AI has been already started. Reserve Bank has started AI to find the person's account where most of the people who are susceptible to fraud, and they are giving pre-warning to the bank. ये सभी account है ना, unoperated account or some mule account, all that. Try to see and put your risk, KYC more risk, so that you will monitor. The RBI is using. Banks are also using for all routine functions where no customer related reply, all AI can do. So that we need not. So AI will be there. आपको उसका first question क्या था?
For the AI related, we are ongoingly working with so many banks. So far, we have got no feedback from branch level or any HO level that this is the offer from the notification from the RBI, and we need to address that. So far, we don't see any movement.
वो तो at the corporate level होता है sir. Branch level. Yeah, please. He'll answer.
So if I can just maybe make some points on RBI. I don't know if you're aware, RBI has now started publishing what they call as SDQI information, supervisory data quality information.
Yes.
Which talks about completeness, accuracy, and everything associated to data. This is now started for private banks, public banks, foreign banks, and this is the public information that's available. Second, RBI has already moved from there's a supervisory approach.
Only white shirt.
So RBI earlier used to use something called as a camel's approach. You can look that up, but it's camel's approach is moved to RBS, which is business supervision.
They don't even share.
As a part of RBS,
मैं उसके लिए ये circulate किया ना WhatsApp के लिए.
they have
directly मिलके.
to what they call as SupTech. What does SupTech effectively means? It's supervisory technology. Which means if sir is one bank and you are another bank, today the SSM or the supervisory manager takes the same thing. कि risk appetite देख लो, stress testing देख लो, ICAP देख लो, ऐसे करते हैं. The whole idea of SupTech is they're changing the way supervision is happening. So they have an on-site supervision team and they have an off-site supervision team. There's a gentleman by the name of Vijay Shekhawat who sits in RBI. He is responsible for AI/ML to say that off-site supervision team is going to take rims of data and create supervision themes different for you and for him. So there is fair amount of that pieces that going on. Like sir mentioned, mule account is one of those, which is an output. There are many more that is happening.
ये सब slides है ना, बहुत सारा data है. वो टाइम में दिखाया नहीं, but अभी आपको दिखा सकते हैं. आप
Sir, one question. Sir, earlier question. So no, the RBI stopped priorities.
Sir, that you go for the monetary policy. It is a big detail. We'll talk outside the meeting. Now, it's a big question. We'll talk outside the meeting, please, sir.
Yeah, next. थोड़ा लो ये.
Loudly, sir. Very loudly.
The most challenging problem from the bank is there any criteria that they should approach the bank after 1 year, 2 year, or 3 years? Many banks they go individual various data. They are not entertaining that type of NPA or stress accounts. Do we have any rules from the RBI? Okay, we can approach after 1 year, 2 year, 3 year. Can we have that type of guidance?
And upgradation, huh?
Yes, upgradation or then we can approach the bank to get the
नहीं, आपका अकाउंट में सपोज एनपीए हो गया by whatever reason, with the 1 year of getting the account regular, with your whatever pending payment, after 1 year they upgrade. नहीं वो सब अभी किधर भी रूल नहीं है. आप एनपीए नहीं तो एनपीए तो नहीं देने का, ऐसा नहीं. But if the bank has lost some money because you are NPA and later we settled the account and you had to pay lower interest to us, then while again we are considered loan, we will cover all that your cost, whatever earlier gone, and again that after that, but it is the discretion of the bank that whether that such account should be taken or not, because one man who is bad cannot be bad forever. That is there. So that if he has come back with a better economic strength, bank will consider. Yeah.
Sir, if I can just maybe add
If you are a defaulter, you will never get that.
Just to add one small anecdotal reference here, so that we are all on the same page. The draft circular on ECL had a provision which says that if somebody is called defaulted, there's going to be a 6 months of cooling off period. However, when the final circular came out, it actually has been taken off. So to the point which sir is mentioning, all of those entry barrier or that cooling off period criteria have also been relaxed to some extent. Now I think each bank will be to their own the way
internal policies. What is saying, आपका नाम है ना, आपका कोई कॉर्पोरेट है, वो आरबीआई का एक लिस्ट है, उसमें वो लिस्ट में आया तो then you have to through the bank you have to produce all your evidence to say that you have already cleared and all. देन उधर से निकलने का भी है पावर है, वो बैंक ही निकल आएगा और आरबीआई से कंफर्मेशन आएगा. ऐसा तो quite a lot of corporate, आप आज के दिन में कितना corporate has gone through CDR mechanism, वही corporate को बाद में बैंक से कभी फंड्स मिला है. आप समझे ना, because there is a system of restructuring and all that, and even during COVID also they are all restructured, but again they were given funds. But generally थोड़ा हेसिटेशन है. बैंक में आप ब्रांच में गया, आप एनपीए है, वो इतना आपको समझ आएगा नहीं, आपको हमारा पास नहीं होगा हेल्प. वही यस. या नेक्स्ट एनीथिंग एनीबॉडी
will conclude, sir. Acha, yeah, we are waiting for you for a long time.
Short questions, and if you allow me the third one, if at all. Yeah, my name is Nikhil Golani, and I represent Vikasani FinTech. Basically, we are a wealth manager.
Okay, questions. Yeah.
So the question is the ECL norms when we speak about they have exemptions to the cooperative banks, to the RRBs, so any of those. So I mean, and the regulator is little even pretty stringent about how they want to let the cooperative system survive. I mean, what's the thought, if at all, you have on how is the cooperative or maybe any of this the second tier or maybe the ones who are servicing the lower end of the pyramid? I mean, how is the regulator looking at, or what is the thought on that?
Second question also. Finish the second question.
And the second question was more on the FCNR. I mean, that was more saying the FCNR. We are talking about $50 to $100 billion is what we are looking to collect, and that's what the government is looking at. 5 years out, when this whole liability would be ballooned, it would be we're talking about $200 billion is what they need to give back, because along with interest and the liabilities of the hedging and whatever. I'm so what is the thought of the panel which they have?
So probably equity will come back. Second का पहले भी all short-term liabilities plus this type of funding, when Reserve Bank एक cycle में पहले $35 billion आया था.
Right.
का repayment time में by that time they created so much forex reserve.
So they are good.
Economy होगा अच्छा, अभी है ना, economy will not remain like this.
Of course.
आगे इसलिए उन्होंने एक bet लेते हैं, अभी भी हम funds लेंगे और मेरा forward liability भी हम उसको पूरा इन्होंने
You got 5 years.
they will
And equity will start coming, all these things will.
So that's fine, that's done.
और ये भाई साहब अब ECL का बताना उनको.
Yeah. So basically the point that remains is when the RBI issued the draft circular, the scope of the draft circular included scheduled commercial banks, RRBs and cooperative. If you see the final circular that has been included, because they want to apply a rule of proportionality, they have actually excluded RRBs and cooperative banks from the scope of ECL. Knowing very well that first let's stabilize the current scheme before we get to the other. So that's, and there is obviously in the RBI corridors, there's a conversation, there is some consolidation in RRBs that is anticipated. So we don't know if that's actually correct or not, but having said that, ECL is not applicable for the other.
Yeah, but if at all they go to there, I mean, they may not even survive. Half of them may find it difficult. Yeah.
A very, very interesting thing. In the committee that I was, RBI, I was only external member. So we had Saraswat Bank as a committee member.
Right.
We also had an SFB bank that was there. And after hearing them, this is exactly what the outcome. So it is not that it was not a inclusive thinking of RBI in my view. So,
thanks.
Acha, now before Rohit closes, half a minute, I request all of you to go to NFRA YouTube. There is a presentation of ECL by the NFRA chairman. See that. We could have had hundreds of presentations which take 80-90% of the time. But you see that. Yesterday I spoke to a few days back to the ICI past president. He said it is there. He himself, he would like to go and see. Have a look at it. Then we were talking about banks. It is yet to be implemented. Consultations are on NBFCs. We talk about real life implementation. I suggest all of you just to take two hypothetical examples. One, NBFC with a very high foreign stake now, and this thing, and one with a reputed brand, Samban Capital. See last 20 quarters numbers, last 20-25 quarters, and see the other one, L&T Finance. They've implemented ECL in spite of improvement in the economy, in spite of a bullish market. Certain provisions have come in certain quarters. So when you read the notes to accounts, because many of us, we understand deep dive, notes to account, emphasis of matter, what is mentioned, what is not mentioned. These two are just two different qualitative companies. You will know the implemented issue and the real core issues. Vijay mentioned about behind people are there, how it is there. And that will be great learning for implementation for our banking system. And if any of you have thoughts, we have one-to-one, you can connect with myself or Rohit. We have a WhatsApp group. There are new members who are given their number because we don't have access to the registration data. So that's why we circulated this. If any of you is not in the WhatsApp group who is a member, please connect with Rohit or Salvin or myself. You will get that. Now I request.
Another important next meeting में रखिए. Those who are charged with the governance. NFRA guidelines.
Yes, that is good.
है ना, ये सबका direct means auditors का responsibility बहुत बढ़ गया.
That's a very
independent director का भी responsibility.
We will cover, and I would request you to be there.
Yes.
And also, you mentioned about insurance.
Yes.
In your preliminary talk, we talked about insurance. We have planned a series of events on insurance with CFOs of insurance companies. In fact, it was Salvin's idea. The whole credit should go today. He says Bankers Day. Then insurance CFOs of top insurance companies, General and Life, have already agreed. In fact, they were going to be here, but then we said instead of mixing up, let us try.
Stability report now. Insurance में lot of mis-selling.
So that has been planned, and you plan only when we are a little worried. Because when you have today over 10 experts are there, so when they come, we want active participation. So they should not feel 5 aadmi hai, but we are okay. But generally it looks nice when you are there. So there is extensive participation, and today participation is really, everybody was really happy. The credit should also be. And Rohit, a final vote of thanks, and then we have to take a group photo together, which we'll be sharing with all. No, that's a group photo. So some faces are.
I will keep it very, very short. Thanks for the patience. We could do justice to the topic to the full extent. There is a lot that we could have done, but at least it's a beginning. Let's see if we can have another good session, more structured one. Thank you all. I'm not actually taking anybody's time.
Thank you.
Very good. Thank you.
Thanks, thanks, Rohit, for really work. Yeah.
Share that YouTube link that you are saying.
Nafra.
In that group we can share.
In the group it will be shared. In fact, the presentation, the link will be shared. And the link will be shared.
One of you should take the photo.
That boy is there.
Boy is there? Boy is not there.
He is there.
I'll take the photo.
अरे you have to be there.
Sir, come now.
थोड़ा पीछे से आइए.
बाहर बोलो ना फोटो.
Sometimes you go here, sometimes we go there. ये लोगो है ना, इधर तो लोगो है.
अभी नहीं.
इधर.
वो प्राइवेट करेगा वो रेट होगा. वो अभी भी.
So that has been taken over by MFI.
आइए सर. हाँ आगे इधर थोड़ा आइए ना.
Come Vijay.
Sir, please come.
Harish, come here. Foreign banker here.
One second. Remove this.
Yes. Come. Yes.
सबका आराम से बहुत सारे फोटो ले.
स्माइल आनी चाहिए.
इधर थोड़ा दूर जाओ. नहीं है. इधर तक आता है ना.
Everybody is coming.
Thank you.
We had you will get it, so you can put on a LinkedIn.
Yes.
And full house and spontaneous.
Thank you very much, sir.
Lot to thank you so much. Okay.
You are still involved in risk. You are involved in
Yeah, actually the main
वैसा डायरेक्टली नहीं
पूरा बैंक का रिस्क रिड्यूस करने में लगा है एंड आरबीआई इज एप्रिशिएटेड.
क्या है कि प्रोविजन करने का तो
I spoke to Nilesh also a couple of days back. इंडिया का रिस्क प्राइवेट सेक्टर का बड़े सो
But there are so many things.
But ये सब spontaneously हुआ.
What is
अच्छा वो presentation
I'm sorry, my it's a very nascent level. With AI and everything, it's a nascent level. Auditors of top level are supposed to do equal things. Yes, sir, auditors of top experience are still small problems. Underutilization.
Thanks a lot. Thanks a lot.
Same to you.
Representation के लिए तो काफी point I'm taking.
you are trying to send your number.
Wonderful channel. I think had it not been
Come regularly, you can take up a session on that.
Heard about you.
Yeah, the couple of friends in here. You left? I'm in BKC.
Hi, how are you?
अभी मैं कंज्यूमर बैंक में हूँ मैं उधर वापस गया
मेरे जमाने में होगा कि कोई मेल आया वो
अरे और कोई ऑफिस में एक छोकरी काम कर रही थी जेपी मॉर्गन में आकांक्षा गोयल गोरेगांव बेस
ओके ओके ओके
બેંકોની લિમિટ હતી
ના ના સાચી સાચી
મારી પાસે એસબીઆઈ પછી બેંક ઓફ બરોડા કેનરા બેંક
SBI से
ઘણા ટાઈમ પછી પેલા આવતો હતો લાગી ગયા
લાસ્ટ ટાઈમ ઇઝી હતો આવી જગ્યા ફર્સ્ટ
અપડેટ થઈ જાય
મેં જોયું ને કે ઇન્ડસ્ટ્રીમાં જેની માટે વધારે ઓપ્શન છે નહીં નેટવર્કિંગ પછી આપણે દેખાવ એટલે જોઈન કરી નાખ્યું કંપની સર આપણે યુ કેન ટચ વિથ ધ પીપલ ઇન ઇન્ડસ્ટ્રી સારું છે ગુડ ને ગુડ મળે હિસાબે આપણે અને આપણે લોકો મળે કે આપણે નોલેજ શેર થાય ને આપણે હવે અને આપણે
જે ચંદુ દે
somebody else, yes, fine, वो भी आ गया. Forward, no?
अच्छा. Report market middle office operations. Front office reporting metrics.
ઘરે જવાના
हमारे यहाँ practice
real people કાર્ડ ખતમ થઈ ગયું એવું છે નેક્સ્ટ એક નંબર આપણે વીએફ છે બોરીવલી સ્ટડી સર્કલમાં
રહું છું વિરાટ છે મારું ઘર બોરીવલી આપણે
branch. And because of this, So I joined.
Very good, very good. But you just give me the like this.
Yeah, just go to consultation.
So that's the feedback.
So I was asking you, what is the
Connections build up. Yes, catch.
But because this topic was related to assets.
उसमें जरा जरा एक जरा हिम्मत चाहिए दोनों तो नहीं यूज है banking is so demanding you don't have that you have to do the bank job to be finished but उधर future so many products so many banks
practically and
what the top management red carpet
थोड़ा और दिखता था बाकी से ठीक है
बिंदास वो सीएमडी है ना वो तो उसका आता है ईडी क्या मिनिस्टर को बुला के तो वहां से उनको व्हाट्सएप पे लीड आएगा तो वो तो आता है कन्विंसिंग उसके ऊपर वो अपना पुशअप भी कर सकते हैं लेकिन ठीक है अंदर
सेकंड पर्सन जो
मैंने कितना सीएमडी को मिला
आता है ना he was in internal
10 मिनट हो गए
president
still is showing up
तो he is also अभी आपने जो रजिस्टर किया होगा ये रजिस्टर तो अभी ये टाइम तो
हां ये वो एमसी में ऐसे बैंकिंग एडवाइजर मतलब
लेट देम
फिर वो लोग एंटरटेन नहीं करेंगे इट्स क्वेश्चन ऑफ व्यूअर का एमसी
बहुत कैंडिडेट रखते हैं लास्ट
आई टेक यू कार्ड इफ यू वांट हैव वन इट इज एन आईडी राइट नाउ
both
Adivate tower that is अरे तो मैं तो खाली बोल रहा हूँ हमारे स्टॉक बोल रहा नो नो कंपल दिए लेकिन आपसे पॉसिबल है तो याद रहे तो एम्पल में भी होगा बाकी अदर देन मेकिंग नॉन मेकिंग थिंग्स जस्ट वी बिन जस्ट सो मेनी मेकर्स जितना सेवा करने बनिया इसलिए you're taking permissions. What's the definition?
बोल ना गेला म्हणून त्याचा फोन आला हा कसं काय गेलं काय म्हणतात ना आपल्याला फोनच्या ताब्यात करावं तो खरा यायचा प्रोग्राम बरोबर याला
स्क्रीन आहे असं वाटतंय.